Hello. All right. Good morning, everybody. Your voices are cold. Is the AC too much? Good morning, everybody. Aha, that's the energy we want to see. A very, very lovely morning to you, our distinguished guests, captains of industries, economic analysts, business moguls, ladies and gentlemen. On behalf of the Lagos Chamber of Commerce and Industry, I warmly welcome you to the LCCI's Economic Review and Outlook Conference 2026. You can clap at this point, ladies and gentlemen. Thank you. I love that clap. The enthusiasm can catch on. Now, Oluwayemisi Akingbola is my name, and I am very excited to help you navigate our conversations here today. That said, ladies and gentlemen, I want to quickly state that this conference has been put together by the Lagos Chamber of Commerce and Industry and has been sponsored by ICO Capital Limited. Now, it is our sincere desire and hope that the conversations that we'll have here today would actively set the tone for the 2026 economic year. On that note, ladies and gentlemen, could you please rise as we take the national anthem?
Nigeria, we hail thee, our own dear native land. Though tribe and tongue may differ, in brotherhood we stand. Nigerians old and proud to serve our sovereign fatherland.
Thank you. Very quickly, as we begin, I think it is very apt to quickly introduce and recognize our distinguished guests, as well as members of the ESCO of the Lagos Chamber of Commerce and Industry. Now, at the LCCI, we're very big on honor, and so I'd like to encourage us to please put our hands together as we recognize each person that will be called here today. But first, let's start by recognizing everyone in the audience. So please, ladies and gentlemen, put your hands together for yourself. It's not loud enough. It's not loud enough. Aha. Thank you for entering my trap. Now, you see this volume of clap that you gave yourself is what I expect for everyone that I will introduce here today. Is that okay? Is that an agreement? Thank you very much. First, I would like to start with the house. That's the Lagos Chamber of Commerce and Industry. And to be very honest, I am very, very happy to introduce to us and recognize and welcome the chief host of this Economic Review and Outlook Conference, the president and chairman of Council, Lagos Chamber of Commerce and Industry, Engineer Leye Kukpolui. Thank you, thank you. The clap can be louder. Thank you so much. You see, the more you clap, the warmer you become, so the AC will not shake it too much. All right, ladies and gentlemen, I would also like to recognize, although I think he's probably running around trying to sort one or two things, but I'd like to recognize the Deputy President of the LCCI, Prince Abimbola Olashore, FCA. A round of applause for him, please. I'd also like to recognize the Deputy President of the LCCI, Mr. Kunut Uvmoyen, MFR. A round of applause for him as well. Particularly, I can see on seat. No, so let me quickly say something before I recognize this next set of persons. When I started working with the LCCI, there's some certain things I noticed. At every point where there's an event, there's always a past president who would come to support. It kind of gives me this sense of family, that the LCCI is one big happy family. So ladies and gentlemen, please, you see the clap that you clapped earlier, we're going to double it because we are appreciating the presence of two past presidents of the LCCI. I'd like to first appreciate and welcome and introduce as well the immediate past president of the Lagos Chamber of Commerce and Industry, Mr. Gabriel Idaosa, FCA. Thank you for that warm welcome, ladies and gentlemen. In the same vein, you see that clap, don't make it go cold. Please put your hands together for the former president, Asiwaju Dr. Michael Olawale Cole, CON. You're so lovely to see you, sir. It's so lovely to see you, sir. Thank you so much. You're welcome. I can see on seat one of our vice presidents at the LCCI. Ladies and gentlemen, I want to recognize and welcome Sir Laddie Smith, FCA. All right, I'll just quickly run through the list that I have of all the members of EXCO of the LCCI, and please, you're just going to put your hands together for them. I'd like to recognize Mrs. Jumoke Fashanu, FCA. She's also a vice president of the LCCI. Otumba Akimbo Akinolugbade, I've not seen him yet this morning, but please put your hands together for him. I'd like to recognize Princess Fumilayo Okeowo. She's also a vice president. Keep clapping, please. Engineer Okpeyemi Aminu, please put your hands together for him. You're welcome, sir. It's so good to see you. Mr. Kola Aderibigbe, who is also a vice president of the LCCI. I'd also like to recognize the treasurer of the LCCI. That's the person of Mr. Gbenga Olabiwoninu. Names have to be spelled correctly. As well as the deputy treasurer, Mrs. Aderonke Adeyegbe. A round of applause for her, please. Finally, I saw her just now. Okay, ladies and gentlemen, I want her to hear this clapping from where she's standing. Please jam your hands together as we recognize the Director General of the LCCI, Dr. Chinyere Amona, FCA. Lovely to see you again, ma'am. Now, as we keep recognizing people, I'm very pleased, ladies and gentlemen, to officially welcome, recognize our special guest here today, and particularly set expectations for each of their sessions. Ladies and gentlemen, I am informed that some of our guests will be joining us virtually today, but because, like I said, LCCI is very big on honor. We're going to appreciate them regardless, okay? So ladies and gentlemen, please make welcome Dr. Yemi Kale. He's a group chief economist, African Export-Import Bank. Thank you so much. He's going to be taking a look at external sector review and outlook, looking at opportunities in the African continental free trade era. Also, I want to recognize Dr. Ayo Teriba, who is also going to be joining us virtually. Is the CEO, Economic Associates. A round of applause for him, please. And he'll be leading a presentation on economic review and outlook, looking at policy options for government and emerging business opportunities. Our next guest is in the house. Start clapping before I call his name. Clap, 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 clap. Thank you. Please recognize Mr. Pedro Omotsume. He's here, is partner and client market leader at PwC Nigeria. You're welcome, sir. He'll be taking a look at oil and gas sector performance and outlook for 2026. He'll be taking a look at challenges, trends, and prospects in the Nigeria's oil and gas industry. Finally, we will also be having Mr. Taiwo Oyedele, who is the chairman, Presidential Committee on Fiscal Policy and Tax Reforms. I will recognize him when he gets here officially, because there's something I want to say in his presence. Maybe I'll be tax exempted. Anyway, ladies and gentlemen, I'm very pleased to be here today. I mentioned earlier, my name is Oluwayemisi Akingbola, and I will be helping us navigate the conversations here this morning. Now, as businessmen, captains of industries, business owners, economic analysts, business analysts, you know, people who make economic decisions, it's not just enough to start the new year on vibes and new year resolutions, new year, new me. You know, it's very apt to take a very strong look at the economic outlook for the year so that we can be armed with the right information as we, you know, approach our businesses and every economic decision that we're going to make in the year. And so to officially welcome us as we kick off this conference, I am pleased to bring up here for the first time, the newest president and the chairman of council of the Lagos Chamber of Commerce and Industry, Engineer Leye Kukpoluyi, to deliver the welcome address. Please keep clapping. That clapping is too soft. Make it louder. Thank you so very much. You're welcome, sir.
Thank you so much. Thank you for recognizing that we are a big family here. Nothing happened here without the former president, honorary life president, as we have our mommy here, more of 90 than 80, and still have time to join us here, Engineer Mrs. Maduka. Thank you, ma'am. And for every guest here today, especially our friend, the diplomatic corps that are here, we say you are welcome. You are always part of us. Without you here, it will be incomplete. Thank you for being here again. Standing on the existing protocol, because I know all my seniors are well introduced, and I won't go back to that. I'll just say, in a way, just bow and say, you are welcome here, sir, for all the services you have had for us in the past, and for having the time to be here, all our past presidents that are here. Thank you for being here, sir. Mr. Idausa and Ashwaju. Alawaleku. Thank you for being here, sir. It is with great pleasure that I welcome you all to LCCI 2026 Economic Review and Outlook Conference. This annual gathering remains one of the most respected platforms in Nigeria for rigorous economic dialogue, evidence-based policy engagement, and forward-looking conversation about our national economy future. Your presence today is a deep affirmation of the private sector commitment to shaping Nigeria's growth trajectory. Not as a spectator, but as an active partner in the national development discourse. In the face of rising level of uncertainty and destruction in supply chain, tariff war, geopolitical tension, and oil price staying below expectation, as well as the threat to food security crisis, and business community need economic intelligence and industrial insight to inform decision and take action. We are meeting here today as a defining moment. The year 2026 stands as an intersection in reform, resilience, and renewed opportunity. The past year have tested household, businesses, and institutions alike, and yet, history teaches us that economy do not transform in a moment of comfort, but in a period of challenge, when difficult choices are made, reform are sustained, and confidence is rebuilt deliberately. As we review economic performance and look ahead, it is essential to base our conversation on fact. Recent data confirm Nigeria has begun to stabilize after a prolonged period of microeconomic stress. Examining the major economic indicator from recent quarter of 2025 reveal a period of challenging reform, including the removal of fuel subsidy, adjustment in our foreign exchange market, tighter monetary policy, and institutional restructuring. While this reform imposed short-term costs, they are laying the foundation of more transparent, market-driven, and resilient economy. The anticipated listing of the national assets, including large energy and industrial players, along with reform in such as transition to T+2 settlement cycle and enactment of Investment and Security Act. And the Nigerian LCCI the Great List, having collectively strengthened our market credibility and reduced systemic risk. The financial sector is undergoing a necessary recalibration. The banking and the insurance sector recapitalization initiative, though demanding, are designed to strengthen the balance sheet, protect customers, position financial institutions to support large-scale investment. As we look ahead, the outlook of 2026 is one of major optimism. Growth is expected to improve moderately, driven by sectors such as agriculture, construction, energy, telecommunication, and digital economy. The interest rate is projected to ease gradually as inflation moderates, creating space for private sector credit expansion. For the private sector, competitiveness in 2026 will be defined by productivity, innovation, government, and access to finance. For government, success will depend on policy consistency, regulatory clarity, infrastructural delivery, and disciplined budget execution. For both, collaboration is no longer optional. It is essential. Therefore, the LCCI remains unwavering in his belief that sustainable economic growth must be private sector led, productivity driven, and people centered. In line with the convention and our advocacy, we continue to prioritize the improvement of ease of doing business and regulatory efficiency, centering our micro, small, and medium-scale enterprises as a critical engine of development, innovation, and inclusiveness, and enhancement of our trade facilitation, logistic and industrial competitiveness, and the promotion of digital transformation, skill development, and innovation. I would like to appreciate all our speakers present here today for this section. We know Dr. Yemi Kale will be joining us from Zoom, and I think Dr. Teriba too will be joining us from Zoom, and Mr. Taiwo will be coming here physically, and my brother has been here. I met him here for PwC. Brother Pedro Omatue. I think I'm right. I'm always right. Thank you for being here, because we always rely on you on and off office. You always have time for us. Thank you very much, my brother, for being here again. Thank you. And on behalf of the council, a member of the chamber, I thank you for your presence and your commitment, for your confidence in Nigerian future. I hereby declare the LCCI 2026 Economic Review and Outlook conference officially open. Thank you very much.
Please keep putting your hands together as the president, and round of applause for Engineer Leye Kukuluyi. Why are you not clapping? Thank you very much, ladies and gentlemen. As the following persons, before we bring up our first speaker today. Ladies and gentlemen, please join me as I recognize and welcome Her Excellency Jete. Hold on. Okay, I'm going to attempt to pronounce this name. I hope I don't moderate. If I get it right, please clap for me. Okay. Abba. All right. I'd like to recognize the Danish Consul General, let's start from there, Our Excellency Jete Berum. Yay! All right. I'd also like to recognize the Swiss Consul General, Her Excellency Connie Kamenzin. Thank you so much for being here. It's so lovely to see you. All right. Now we are going to quickly delve into why we are here, and that is the Economic Review and Outlook Session 2026. And we are starting with our first speaker, who is the CEO of Economic Associates and a leading voice in economic policy analysis in Nigeria. He's joining us virtually this morning, and so please, ladies and gentlemen, as they prep to project Dr. Ayo Tariba, please put your hands together and make him welcome. Is he online? He is. Fantastic. All right. For the next 30 minutes, he will be speaking to us about policy options. Oh, he's not yet online? All right. So should we, give me a signal. Should we move on? Should we move on? Okay. Anyway, as we're trying to figure out making sure that Dr. Ayo Tariba joins us, I want to say that he will be speaking to us about policy options for government and emerging business opportunities this morning. And of course, while we're waiting for them to figure that out, I have to do some filling in. Now, if this were radio, we would just plug in adverts. So you just hear me, pam, 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 pam. But it's not radio. Anyway, now I would like to quickly run through a list of the conversations that we're going to be having this morning. Apart from Dr. Ayo Tariba, we'll also be having Dr. Tokwe Fashua. Now, Dr. Tokwe Fashua is a special advisor to the president on economic affairs. He will be speaking to us about Nigeria's economic scorecard in agriculture, manufacturing, and services. We also have Mr. Pedro Omotoemen. He's right here and he's seated. And I am proposing that while we're waiting for Dr. Tariba's video to be sorted, that we bring Mr. Pedro up, right? So that we can quickly move ahead with the things that we have to do. Does he? Yeah, sorry, I didn't hear you, sir. Oh, he stepped up. Oh, I thought he was on seat. This is an amazing, interesting situation. All right, guys. Well, when he steps back in, I guess we're going to bring him up so that we can, plug and play. But he is going to be speaking to us about the trends, challenges, and prospects in Nigeria's oil and gas industry. That's looking at the oil and gas sector performance and outlook. We'll also be having Dr. Yemi Kale, as our president mentioned earlier, is a group chief economist, African Export-Import Bank, and he'll be speaking to us about, on the external, what's happening on the African continental trade area. He's going to take a look at the external sector, and that's going to impact us economically, looking at opportunities in the AfCFTA era. Okay, so are we back now? Can someone please give me a signal? Are we back? No. Okay, can someone please help me find Mr. Pedro? I'm sure he's going to be shocked that I will be put on the spot this morning. All right. I think that this might be a good opportunity to speak about internet services in Nigeria, right? It might be a good opportunity to speak about it. I mean, it's one thing to rely on network, that's internet facilities. It's another thing to rely on government, NEPA power, IKE, DCIB, all of those things. But it's another thing to know that when you rely on them, you're going to get what you have or what you've requested. Because now I think we're having some network issues, right? We're having some network issues. So what's the update now? Ladies and gentlemen, please put your hands together for me. I must confess, at some point I was starting to get nervous. That I'm sure, won't I start breakdancing in front of this audience this morning? All right, ladies and gentlemen, we'll be replacing that conversation, and our first speaker this morning will be Dr. Yemi Kale. He's the Group Chief Economist, African Export-Import Bank, and he'll be taking us through external sector review and outlook, looking at opportunities in the African Continental Free Trade Area era. Ladies and gentlemen, joining us virtually, please put your hands together for Dr. Yemi Kale.
Good morning, distinguished ladies and gentlemen. I hope you can hear me and you can see my screen. Can you please confirm you can hear me and see my screen?
Yes, we can hear you.
Can you see my screen and my slide? Okay, thank you. Good morning again. Like I said, once again, ladies and gentlemen, to thank the management and the president and management of the LCCI for inviting me to deliver this presentation. So today I've been asked to speak on the outlook for Nigeria's external sector, with particular focus on the opportunities that emerge in the African Continental Free Trade area. So my presentation is about where Nigeria's external sector is, it's coming from, where it currently stands, where it's likely headed, and most importantly, how Nigeria can strategically position itself to benefit from the AfCFTA. So I have like about 20 minutes, and as you can see, I have like 26 slides. So I'm going to really move very quickly and summarize most of the contents in my presentation. Moving to the next slide, you can see the structure of my presentation as shown on the screen. So first, by way of background, as we know, Nigeria is one of the largest economies in Africa. It is by far the largest in West Africa. It's also Africa's largest potential consumer market. Now, this has major implications for the AfCFTA, both as an opportunity and I guess you can see as a responsibility. Firstly, without Nigeria, AfCFTA will lack sufficient scale, given Nigeria's over 200 million population and rising middle class. The AfCFTA also creates an opportunity for Nigeria to be a manufacturing hub, given its large labor force, given its growing industrial base, as well as its strategic access to West and Central African market. Also given its huge micro, small, medium scale enterprise base, as well as its huge youth population. All of this allow MSMEs in Nigeria to gain access to new African markets with potential for job creation through export-oriented industry, which can help reduce unemployment and underemployment rates, which in Nigeria are still very, very high. Now, despite the fact that external trade, and I'm referring to trade, the external sector rather, and I'm referring to trade, I'm referring to capital flows, exchange dynamics, and so on, are crucial for Nigeria's growth and stability. Historically, Nigeria's engagement with the global economy has been shaped and is still being shaped by all exports and large import needs. However, with the global economy now stabilizing despite the persistent, turbulent and uncertain environment. And as capital is becoming more selective, and as trade patterns are shifting, the AfCFTA now presents an opportunity for Nigeria to reposition itself from an oil-dependent economy into a more diversified, competitive continental trading hub. So this takes, but let me start with the recent performance of Nigeria's external sector, which has improved significantly, especially over the last 2 years. Now, Nigeria's total trade has rebounded strongly. In the third quarter of 2025 alone, total trade reached 38.9 trillion, representing about nearly 9% year-on-year growth. And for the first time, and for the first 9 months of 2025, total trade stood at about 123 trillion naira, which is over 21% higher than during the same period in 2024. Now, what is particularly notable here is that exports are now clearly outpacing imports. In Q3 2025, exports stood at 22.8 trillion compared to imports of 16.1 trillion, resulting in a trade surplus of 6.7 trillion. And on a year to Q3 2025 basis, Nigeria recorded a trade surplus of about 19.3 trillion, which is roughly about $19 billion, which is about 44% higher than it did in the same period in 2024. Now, these gains have been supported by a combination of recovering global demand and increased domestic output, as well as the major domestic policy shifts, which was mentioned earlier, especially the foreign exchange reforms. So the earlier move taken by the government towards a more unified and market-driven exchange rate improved price discovery, it reduced arbitrage, and it began to restore, to an extent, investor confidence. And while the naira depreciation that followed the policy initially raised import costs, initially stoked inflation, it has also improved export competitiveness. It is supporting government revenue generation. It has also reduced structural distortion that we found were in the FX market previously. On capital flows, remittances remain Nigeria's most stable external inflow, rising to about almost $21 billion in 2024. As of Q3 2023, it was about 15.5 billion, which means that annualized by the end of 2025, it probably will come to about the same level as it did in 2024. FDI, however, remains relatively modest, but post reforms, we are seeing some investment interest in manufacturing, in fintech, in energy as well, suggesting that this cycle of low FDI may be slowly turning. But the key takeaway here is that Nigeria's external sector has strengthened. But sustaining this momentum will depend on diversification, depend on the level of competitiveness. It will also depend on policy competitiveness. This headline, trade surpluses, however, do not tell the full story. To understand sustainability, which is the key, need. We must look at what Nigeria actually trades. We must look at who it trades with and how resilient those trade flows are. So this takes us to the trade composition and diversification portion of my slide. So looking at trade diversification, we find that despite recent improvements, crude oil still dominates Nigeria export earnings. In the third quarter of 2025, crude oil exports were valued at 12.8 trillion naira, which accounting for about 56% of total exports. This means Nigeria's external revenues remain highly sensitive to oil price swings and production disruption. And this is why diversification matters for sustainability of the recent gains we have talked about, because it improves resilience, it spreads income across sectors, It helps to create jobs and stabilizes foreign exchange earnings. That said, there is encouraging progress also on the non-oil front. Non-oil exports reached a record 9.2 trillion in the first 9 months of 2025, which is higher than the 6.2 trillion that it recorded in the same period of 2024. And the non-oil sector growth is being driven by agro-processing, it's been driven by solid minerals and emerging manufacturing segments, particularly cement, plastic, and aluminium. Beyond exports of goods, the services sector also represents a major frontier. Services, as we know, is the largest sector in Nigeria. In Nigeria GDP, it accounts for 55% of Nigeria GDP, driven by financial technology, ICT in general, the entertainment subsectors, professional services, which all of which have, if managed properly, have clear regional export potential under the AfCFTA. But then that's only if we're able to do the right things at the right time for the right reasons to exploit them. So if you get this right, over time, services exports could become a powerful stabilizer of Nigeria's external sector. Now let's turn to Nigeria's position in intra-African trade, which is the whole purpose of the AfCFTA. Now, despite being Africa's fourth largest economy, despite being by far West Africa's largest economy, like I mentioned earlier, Africa's largest potential market, Nigeria remains under-integrated into continental trade. Only about 10 to 15% of Nigerian exports go to African markets, and these are still heavily dominated by energy products. And although trade with Africa has been rising of late, it is still rising at a very, very low base. Also, ECOWAS remains Nigeria's main African market, which I guess is not surprising. Trade with ECOWAS reached about $1.9 billion in the first half of 2025, which is roughly 33% higher than it was a few years earlier. So exports to ECOWAS are strengthening, and imports from ECOWAS are also rising. However, Nigeria's trade footprint outside West Africa still remains thin. Trade with non-ECOWAS African countries has declined significantly since 2019. But to me, this highlights both a challenge, but also a huge opportunity. On the one hand, Nigeria seems comfortable trading within its immediate neighborhood, but has not yet built the logistics, the networks, and the competitiveness needed to scale continent-wide. And I think this presents huge opportunities if we're able to exploit them. Against this backdrop that I've given, several insights emerge from my analysis. First, Nigeria is under trading with Africa relative to its economic size, which means the upside potential is very large. Second, near-term gains will likely come from deepening ECOWAS supply chains while deliberately building routes into Northeast and Southern Africa. And third, as AfCFTA implementation grows, the binding constraints are no longer tariffs. Rather, they are logistics, they are standards, they are finance, and they are competitiveness. And fixing this is what to convert the market access provided by the AfCFTA into actual resilience and resilient and sustainable export growth. This brings me to the AfCFTA and its strategic importance to Nigeria, as well as Nigeria's role and readiness as far as the AfCFTA is concerned. So, as we know, the AfCFTA aims to create a single African market by eliminating tariffs on about 90% of goods, as well as reducing non-tariff barriers and harmonizing trade rules. And if fully implemented, it covers a market of over 1.3 billion Africans with a combined GDP of over $3.4 trillion. So this is a very, very ambitious economic integration project. And while Nigeria initially approached the AfCFTA with, I guess, understandable caution. It has now fully committed. Tariff schedules have been submitted, service sector offers are being developed, and implementation institutions are now in place. However, our policy readiness does not automatically translate into export readiness. They're not really the same thing, especially for micro, small, medium-scale enterprises. The fact that an opportunity exists, if an opportunity exists and is not really understood or is not used, then it remains just an opportunity. We find that only about 30% of Nigeria's MSMEs even know about the AfCFTA, and even less know how to exploit the opportunities. There are also delays in trade facilitation reforms, as well as port automation, which continues to constrain effective implementation of the AfCFTA. Nevertheless, the opportunities remain vast, and like I said earlier, the AfCFTA opens major opportunities for Nigerian goods, especially manufacturing, agro-processing, cement, petrochemicals, fertilizers, automotive assembly. All of these sectors in particular will all stand to benefit significantly from scale and tariff-free access if exploited properly, and it also allows these industries in particular to operate at a continental scale, improving efficiency and their competitiveness. I mentioned earlier the importance of the services sector in Nigeria's economy. And to me, services may potentially be Nigeria's biggest AfCFTA win. Nigeria banks, fintechs, telecoms, and creative industries are already expanding across Africa. Digital services exports are also growing rapidly, and AfCFTA services and digital trade protocols can help accelerate this trend for Nigeria. In addition, the AfCFTA improves Nigeria's attractiveness as an investment base for companies that choose to target these African markets. Now, despite the opportunities that are highlighted, challenges remain significant. Tariffs may have started to be removed, but non-tariff barriers are still there, even in some cases even getting stronger. So, and also poor infrastructure, high production costs, limited MSME readiness, like I mentioned earlier, as well as macroeconomic risk are all constraints to Nigeria's ability to compete. So in summary, while AfCFTA reduces tariffs, Nigeria's binding constraints are more related to high trade costs. They are more related to uneven competitiveness, as well as limited MSME participation. So having laid down the opportunities and constraints, the critical question becomes, what must Nigeria actually do to translate AfCFTA from a policy framework into real trade outcomes? For me, the answer is it's not really one single reform. I think it needs to be a coordinated set of actions across trade facilitation, infrastructure, competitiveness, MSME support, as well as macroeconomic stability. The first priority to me relates to trade facilitation. Tariff reductions under AfCFTA are necessary, yes, but they are not sufficient. In practice, Nigerian exporters are usually constrained far more by port delays, border inefficiencies, custom procedures, as well as regulatory bottlenecks than just tariffs themselves. Tariffs are actually not the biggest issue. Also, a Nigerian product that clears customs in days rather than weeks immediately becomes more competitive, even without any subsidy or protection. This is why full implementation of customs modernization in Nigeria is critical. The unified customs management system being introduced must therefore move from its current, very quickly from its current pilot phase to full nationwide execution. Also, digitization, risk-based inspections, and one-stop border posts with neighboring countries should also become the norm rather than the exception. Port efficiency is also equally um, vital. Congestion at Nigerian ports add unnecessary costs to exports, and they discourage time-sensitive trade. Digitized documentation, expanded port capacity, functional inland dry ports also can help dramatically to reduce turnaround time, which is very important for Nigeria to take advantage of the AfCFTA, to be very competitive, to take advantage of the AfCFTA. At the same time, Nigeria must accelerate its investments in physical infrastructure, power, roads, rail, broadband, and so on. Manufacturing companies in particular cannot compete continent-wide if they are still relying on diesel generation, poor power, or on poor logistics. So closing these infrastructure gaps is key for Nigeria's export competitiveness strategy under the AfCFTA, for the AfCFTA to benefit the Nigerian economy. The second priority is industrial competitiveness. AfCFTA is not a protectionist agreement. It actually exposes Nigerian firms to competition, but it also rewards Nigerian firms that are efficient, that scale, and that can adopt value addition. So Nigeria must therefore shift decisively from defensive import substitution towards a more export-oriented industrial policy. They want to maximize the benefits of the AfCFTA. In this regard, again, I believe agro-processing, petrochemicals, cement, fertilizers, textiles, pharmaceuticals, and light manufacturing are clear candidates. Export incentives, if they are introduced by government, should be very clear. They should be very transparent. They should be predictable. And they should be focused on value addition. Schemes like the Export Expansion Grant must also be strengthened and better aligned with AfCFTA consistent objectives. Equally important is access to finance. Many Nigerian SMEs receive export orders, but cannot fulfill them due to working capital constraints. So if we are able to maximize the benefits of the AfCFTA, access to finance needs to be improved at affordable interest rates. So trade finance instruments such as pre-shipment finance, export credit insurance, factoring, and so on must be scaled up with strong participation from our commercial banks as well as domestic and African multilateral development financial institutions. MSMEs also deserve special emphasis because, as we know, they form the backbone of the Nigerian economy, but yet most of them are still not export ready. So awareness of AfCFTA, the awareness of the AfCFTA remains low, as I mentioned earlier, and compliance with standards, certification, rules of origin for those that are even aware are still constituting a huge hurdle. So targeted training on AfCFTA for many of these institutions, these companies, introducing export help desks, maybe mentorship programs, they're all essential to bring MSMEs into continental trade and exploit the AfCFTA. The third priority is macroeconomic stability and policy credibility. I think this is quite clear. No trade strategy can succeed in an environment of persistent macroeconomic volatility. And that's why the stable macroeconomic economy that we have currently is helping. Exporters need a predictable exchange rate regime. They need declining inflation. They need confidence that government policies will not change abruptly. And while recent reforms, particularly the exchange rate liberalization and fiscal discipline, have helped restore some confidence, it's important that this reform must be sustained. High inflation in particular is also important because it raises production costs and erodes export competitiveness. And if we are not able to compete, we will not be able to take advantage of the AfCFTA. So tight but credible monetary policy remains necessary until disinflation is firmly entrenched. Equally important is policy consistency. Sudden trade restrictions, border closures, or export bans, while sometimes well-intentioned, undermine Nigeria's credibility under the AfCFTA. If domestic industries face competitive pressure, Nigeria should rely on rules-based safeguards provided within the AfCFTA rather than, as we have done many times in the past, on ad hoc measures that really don't work very effectively. So the importance of stability and predictability cannot be underestimated, and are, in my opinion, themselves powerful investment incentives. The fourth priority for me is strategic engagement with AfCFTA institutions. It's not a static agreement. I think it's better described as a living framework that is still being negotiated and shaped. So Nigeria must remain actively engaged to ensure that protocols on investments, on competition, intellectual property, on digital trade support its development objectives. The AfCFTA Adjustment Fund, for example, backed by AfCFTA, is also particularly important here because it provides resources to help African firms and workers adjust to the liberalization that comes under the AfCFTA implementation. Gives them time to upgrade so as to help them upgrade capacity and also to remain competitive. So Nigeria should also deliberately promote regional value chains rather than seeking to compete with every African country in the same product. I think it is better that Nigeria collaborates. For example, sourcing imports regionally and exporting finished goods continent-wide. Finally, the government and the private sector need to work together. Trade fairs, business-to-business matching, export promotion, missions, and market intelligence sharing. These are all practical tools that convert these agreements such as the AfCFTA into actual transactions. So what does this all mean for Africa, for Nigeria's outlook? The short answer is cautious optimism. Yes, recent reforms have improved Nigeria's external balances and investment sentiment, which I mentioned at the beginning of my presentation. But the sustainability of these gains depends on how effectively Nigeria leverages the AfCFTA to diversify its exports and deepen regional integration. So looking ahead into 2026, I expect Nigeria GDP growth to reach about 4.2%. This growth is expected to be supported by higher oil production and higher oil prices, as well as the full impact of the Dangote refinery, as well as continued expansion of the Nigerian services sector. Trade is also expected to play a major prominent role in this regard. Non-loan exports I expect will continue rising, supported by a more competitive exchange rate and as well as improved market access under the AfCFTA. And in this regard, even a modest increase in Nigeria's share of exports going to Africa will translate into billions of dollars in additional export earnings. To also act as a hedge against global economic disruptions. Nigeria's current account is, as a result, I believe it would remain broadly balanced or in surplus, but provided global conditions, which are still uncertain, remain stable, and there are no domestic shocks or any reversals in policy by policymakers in Nigeria. Over the longer term, I still maintain that the potential impact of the AfCFTA for Nigeria can be transformative. There are several studies, including at AfCFTA, that have shown that its full implementation could more than double intra-African trade by 2035, with manufacturing accounting for the bulk of that increase. So if Nigeria becomes more competitive, it stands to be one of the largest beneficiaries. We need to understand that the huge opportunity here to finally diversify our trade, which we have been trying to do for decades and struggling to realize, we actually have a real opportunity to do that now. So we should not treat this as one of those things that we just do that we don't take serious. It's a huge opportunity. It gives us a huge opportunity to transform our economy, make it more diversified, both in terms of sector as well as revenue. And if we take it very seriously, we can actually achieve this. Manufacturing output could easily rise substantially. Services exports could scale rapidly, and we can create millions and millions of jobs out of this. But again, this depends on sustaining the current reforms. It depends on continuous infrastructure investment and deliberate competitiveness policies and strategies that need to be introduced. I will conclude by saying that I believe Nigeria's external sector is at an inflection point. Recent improvements um, in our trade balances, in our reserves, in investor sentiment suggest that the economy is gradually becoming more resilient, but a lot of work that needs to be done. At the same time, Nigeria still remains, for now, vulnerable to oil price shocks. We still remain vulnerable to global economic shocks. And this is why, like I said, diversification is very urgent, it's very important. And the AfCFTA offers us the opportunity to do all of this in a relatively short period of time. Thank you very much once again for inviting me to give this presentation. And I'm happy to take your questions. Thank you.
Before you go, sir, would like to take a couple of questions in like the next 5 minutes. So does anyone have questions so that we can do this very quickly? Any questions?
Okay. I would like to ask a question, if that's permitted.
Okay, yes, you may proceed, sir. But before you do, sir, can I get a mic up front? There are raised hands here, so please raise your hands if you have questions so that they can take note of that. Dr. Tariba, please go ahead, sir.
Okay, thank you very much. Well, I'm going to keep it short and do protocols when it's my turn to speak. Good to see you, Yemi. Please don't go without making a comment or two about the situation that we have with the consumer price index and its interpretation in Nigeria. That's the long and short of my. Good to see you, Yemi. All the best. Thanks.
Thank you, Dr. Tariba. Always nice to see you. I was looking forward to listening to your presentation. Well, the CPI issue well, there are two issues. It's difficult for me to comment on for obvious reasons. That's a situation I headed for over a decade. Most of the systems in place I helped to develop, so it's very difficult. I join all of you in raising concerns as well. I felt things were not. Maybe the system rushed to release the initial numbers. I feel that things could have been done a lot more correctly. I've always complained about about the approach that was used. Usually, when you try and rebase, and that's standard practice, what I would have done if I was still in office, what I do is that you run the numbers, the new numbers with the old numbers for at least 12 months, just to ensure that they are working. You don't just publish the numbers without details. It's not. Transparency is extremely important. What you are doing is extremely important. And if data does not have transparency, people don't believe the data, then even if it's correct, it has no value. And that's why one of the things I said to my successor when I left my closing speech was, please ensure that you don't lose the hard-won credibility that the bureau has built. And if you do that, at the end of the day, nobody believes anything you do. So I think there were some mistakes made from the selection of the base year. I just assumed that some things were rushed. I don't know why they were rushed. And I think there were clear errors that need to be fixed. I think all the comments on the CPI and its inconsistency, I have to agree that are valid. I would just say that well, mistakes can be made, and as long as the bureau is willing to fix his errors and listen to experts like Dr. Teriba and others. That's what matters. It's not a defensive posture. It's to get the actual data. That's all that matters for everyone. That's what is good for policymakers. What's good for Nigeria. It's not defense. It's not protecting what you have done. There were clear mistakes made. I've cited this several times. In fact, I joked once with one of my colleagues that when they said that there was no, we are starting with 2026, and 2025. So I said, then how do you have your year on year if you don't have a, if you don't have a, how do you calculate year on year when you say that the previous numbers are not comparable? It means that you must have a year you are basing. So there's a lot of things that we have to talk. But I will continue to speak to my people, and with the support of people like Dr. Teriba, I think we'll get there. But yes, I agree there are some questions that need to be answered as far as the CPI is concerned.
That's fair enough. Thank you very much.
All right, thank you so much. We'll take our first question in-house. Dr. Yemi, are you still with us?
Yes, please.
Oh, fantastic. So we'd like to take our first question from the Danish Consul General, Excellency Jette Berum.
Hello, good morning, and thank you very much for a very nice presentation. Good to hear the positive outlooks. I have one question in terms of the Nigeria scale, when you look at the regional position. And do you have any comments in terms of the pre-election year coming up and election year, especially in terms of the recommendations for policy momentum, keeping that?
Well, yes, I think I struggle to hear the question, but if I get the answer correct, and please correct me. I think you were asking about the implications for Nigeria with the elections coming. I think in every country in the world, every country in the world, whether developing or developed, they are very careful about pushing what could be unattractive policies before elections for obvious reasons. And Nigeria is not different. When you do a lot of reforms, they hurt initially, like this one is hurting initially. It doesn't mean the reforms are wrong. It just means they're going to hurt before they get better. And when you're and so there's a risk that closer to elections, policymakers might not want to push unpopular reforms. I don't think they're going to reverse reforms. I think they might be the worst, because I think everybody understands that those reforms are needed. I think the worst that you see is that they might slow down a little bit until after the elections, but I don't believe there's going to be a reversal. I think we all understand those reforms were needed. I think we understand that they are working. I think we understand that more is needed. And I think all that you will see is that they might it might slow down a little bit, but I don't think it's going to be reversed. I think I answered your question. I couldn't really hear it clearly.
Oh, yes, thank you, thank you. So very quickly, I'd like to see again, how many questions do we still have? Please raise your hand if you have questions. Okay, I can count 1, 2, 3. Please bring that mic and give it to mommy in front. Okay, do you have a written question? Okay, you can pass that to me.
Thank you very much. Thank you very much, Dr. Kalia, for your very exhaustive review and outlook. I've been working in this sector of non-oil export and diversification of the economy, and specifically with SMEs and export. And as you said, there is not enough awareness about AfCFTA where SMEs are concerned. And I would just like to inform you that we do have a committee in the chamber. We'll be reaching out to you so that we can try and organize something that will make it, bring AfCFTA closer to SMEs. And secondly, my worry is that there is money in this country. People have money to invest, but they do not know that there are SMEs export ready who need investment, both in capacity building and in finance. And unless we have these SMEs able to scale, they cannot do proper export. What is AfCFTA doing in that regard to ensure that there is adequate scale on the part of SMEs that actually have very good marketable products for export? Thank you.
Thank you for that. That was an excellent question. I think, firstly, in terms of your first concern about the fact that um, um, many MSMEs don't have full knowledge of how to take advantage of the AfCFTA, that's why we organize regular intelligence presentations on the AfCFTA, how it works. We did one recently. I'm not sure if you're aware. We did one recently in Abuja, where we had over 200 participants. We do that across the continent. So yes, we do realize that the knowledge of the AfCFTA is very low. We probably need to partner more with organizations like yours to ensure that we get that information out to businesses in Nigeria as much as possible. So yes, they're ongoing. Last year we did about 6 such workshops, fully funded by AfrEximbank. We intend to do a few more again in 2026. So that's the way forward. Maybe we will speak later on how we can do it, some joint seminars and conferences with your organizations to ensure we get everybody in the room. That's one. Two, we have an MSME desk, and the objective is not only to provide capital for MSMEs, we also provide intelligence, helping them make sure that their project support for making sure that they receive lines of credits and different kinds of customized financing that will help them to not only produce but also to export. So again, we have several products, like I mentioned, within AfrEximbank to actually do this. We also have to solve the problem of payments, which we have the Pan-African payment system. Now, the objective was, we understand that we don't want African countries to have to source dollars that they cannot find to be able to import or export. Now with the Pan-African payment system developed by AfrEximbank, a Nigerian can import raw materials from Ghana without finding dollars. You just using your naira, you buy whatever you want in naira, and you get the Ghanaian exporter gets his cedis, or the other way around. If you want to sell goods to Ghana, the Ghanaian receives your goods, he pays you in cedis, and you get your naira automatically deposited into your account without looking for dollars. These are the kind of things that we are doing to make trade within the continent more effective, to make the AfCFTA more effective. Also, we understood that lack of knowledge, people don't even know what is produced in other African countries. To do this, we developed a platform, a trade intelligence exchange platform that ensures that if I want to know, if I produce plastics and I want to know which countries in Africa are demanding plastics, all I have to do is go to that platform and I see the different African companies that are producing, that require plastics, and I see the details of those companies that require plastic, so that it's easy for me to export my goods to those particular countries. And in the process, we have a Mansa repository. The objective of that platform is also to verify potential buyers and sellers. So if you are afraid that you don't know who you are dealing with in Tunisia, you don't know whether this person is a legitimate business or not. Now, we have done the vetting for you, the due diligence for you. So anybody you see on that platform has been verified, has been authenticated by AfrEximbank, so that you are free to trade and discuss with that person without worrying about whether or not you are dealing with a legitimate person. So these are the kind of steps we take at AfrEximbank, trying to ensure that we enable countries and businesses within countries to maximize the benefits of the AfCFTA, so that we can boost intra-African trade.
Thank you, Dr. Yemi Kale. We have to take one more question for this session because we still have questions. Hold on, please. Please hold on. We still have questions and answers for the next. Please hold on. We still have questions and answers for the next session. And I have one here, and it says, can Nigeria grow its GDP faster than 4.2%, and how?
Nigeria can and has grown its GDP much faster than than 4% in the past. And Nigeria has grown its GDP above 10% 20 years ago. So yes, you can grow. Nigeria's potential growth and current growth, there's a huge gap. So yes, Nigeria can grow its GDP much more significantly. What it takes is putting the right policies, removing the constraints of growth, which I mentioned in my presentation, from infrastructure, getting your policies right, getting your infrastructure right, supporting businesses, putting money in the hands of domestic consumers by reducing employment, increasing wages, creating more jobs. When you do that, you get how does your GDP grow? GDP is basically the sum of your goods and services. And people only produce goods and services. They have people that are willing to purchase, to buy those goods and services. And the people that are prepared to buy your goods and services are your domestic consumers as well as your international consumers. So if you are able to put money in the hands of your domestic consumers, you can increase your GDP, because the more money that is in the hands of consumers, the more people will produce to supply them, and the bigger your GDP. If you're able to become more competitive by fixing infrastructure problems, by putting the right policies in place, then you'll be able to compete internationally and now supply your goods and services to an international audience. Once you're able to do these right things, you're able to expand your consumer base, both domestic and internationally. Then you're going to expand your production base, and then you're going to be able to grow faster. So yes, Nigeria can grow much faster. We just have to get our policies right, get our investments right, put money in the hands of our consumers, reduce the cost of living, in general, the ease of doing business, so we're a lot more competitive.
Thank you so very much, Dr. Yemi Kale. Please, ladies and gentlemen, put your hands together for the Group Chief Economist, African Export-Import Bank, Dr. Yemi Kale. We could see earlier that Dr. Ayo Teriba was also waiting for his session, and we'll be moving quickly into that. But just before we do that, while the program was going on, a couple of persons, it was brought to my notice that we needed to recognize a couple of persons. So ladies and gentlemen, please put your hands together as I recognize and welcome Mrs. Olajumoke Fashanu, FCA, Vice President, LCCI. You're very welcome, ma'am. In the same vein, with the same amount of clapping, please put your hands together for the Honorable Live Vice President, Engineer Mrs. Olumaduka. Please put your hands together for her. It's good to see you, ma. And of course, I also like to recognize the presence of another Honorable Live Vice President, Mrs. Folashade Bebentin Young. A round of applause for her, please. You're welcome, ma'am. All right, ladies and gentlemen, I was just about to say, all right, guys. I thought I was in my coaching session. All right, ladies and gentlemen, our next speaker is a CEO, Economic Associates, and a leading voice in economic policy analysis in Nigeria. Joining us virtually this morning, please put your hands together. Oh, it's this afternoon. Yes, joining us virtually this afternoon, please make welcome Dr. Ayo Teriba. And for the next 25 minutes, he will be speaking to us about policy options for government and emerging business opportunities. A round of applause for him one more time. Dr. Teriba, are you with us?
Thank you very much. Yes, I'm very much with you.
Thank you so much. We can hear and see you.
Thanks so much. Master of ceremonies, the president and the members of the council and members of the Lagos Chamber of Commerce and Industry, ladies and gentlemen, I want to thank you very much for the opportunity to be a part of this conversation. I'm especially happy to observe the quality of the speakers that have been lined up for today. And it's my delight that this will be an opportunity for all of us to learn as we drink from the, fountain of knowledge. The involvement in particular of Dr. Yemi that we had just listened to, and Dr. Fashua, as well as Mr. Taiwo Oyedele, is a very good one. I understand I have 25 minutes. I'll spend 2 minutes out of it. I'll try and keep what I have to say very brief. I've been asked to address policy options, but I'm going to pitch my speech in between the year we had just exited from, year 2025, and the year we have newly entered, 2026. So I'm going to be spending my 20 minutes trying to do 4 things. Number 1, as we take stock about what we experienced in 2025, what did we get right that we need to keep? That's my first point. The big hits of President Tinubu's administration and his team. The big policy hits. My second point would be, what more do we need to get right in 2026, which by chance we haven't managed to get right in the course of 2025? If you like, you can call it the big policy misses of President Tinubu and his team, or lingering concerns. And the third point that I would like to address is, what's the outlook of 2026? How do I expect that 2026 will be different from 2025? Are things likely to get better, or are they likely to get worse? Would be an assessment of the outlook will be my third point, after giving credit for the positive achievements and drawing attention to areas about which I am concerned, and about which I believe most of us will similarly be concerned. Then I will assess the outlook, for 2026. I will try to be neither pessimistic nor optimistic. I will try to steer a middle course. I will try to be realistic, which is, I believe, what the MCD refers to as policy options. And I would like to close on my fourth point, which is, what difference can LCCI make? And the LCCI has very strong convening power, has a very strong voice, and we are all here because we understand, that strategic position of the LCCI. So with this introduction, let me just dive straight into my first topic, my first subtopic, if you like. What did we do right so far in the 2.5 years that the president has been at this title? And I want to congratulate the president and his economic management team, including the coordinating minister for the economy and the governor of Central Bank, and the rest of the people in their teams, for the following major achievements, for the following major variables that have recorded positive turnarounds. First, net reserves. The net foreign reserves of Nigeria was reported to have been as low as $4 billion in 2023 when the regime came in spite of gross reserves being at 33 billion. And they managed to rebuild the net reserves to 29 billion as of November 2025. That's a very remarkable achievement. That's a more than seven-fold increase in net reserves. If the regime could maintain that tempo, you've done seven-fold increase in 2 years. If you can do 2 or 3-fold increase in the next 2 years or 1.5 years, then we can see, a doubling minimum, at a minimum, a doubling of the growth numbers that we are brandishing now. But that's the first point. That reserve adequacy, net reserve adequacy, has given Nigeria the opportunity to score another important success, which is exchange rate stability. It's more than stability because the exchange rate ended it peaked at some point in 2024 at 1.9. And they ended 2024 at 1,650. At peak, the monthly peak was November, which was 1,750. So a year later, by the time we got to December last year, we were doing 1,420. And we closed the year at around 1,450. So if you compare 1,450 of exchange rate with 1,750, which was the monthly peak in November 2024, that's 300 naira gain per US dollar for every Nigerian, for all of us, after we've gone through the 1.5 years of crisis and reform. It's a landmark achievement. We're at 1,450 and the rates are convergent. It's a monumental achievement. It would never have been possible without reserve adequacy. So that's the second achievement, which became entrenched in 2025. The third one is that inflation that had decelerated for 18 consecutive months from June 2023 to November 2024 has since December 2024 decelerated steadily, with the exception of March. So the decelerating trend has been, if you take December as 1 month and the 12 months in 2025, for 13 months, we have been on a decelerating trend. That's something to congratulate ourselves for. And it's something that you have to give the president and his team, of course, including his special advisor on economic matters, Tokwe, who is here with us, strong credit for. History would be very kind to them, for resolving this exchange multiplicity that we've grappled with for like a decade, since the oil prices collapsed in the second half of 2024. And now, even without improvement in oil price, with oil prices still low and unstable, determined reform efforts had given Nigeria improved reserves and stable exchange rates and deceleration in inflation. These are superlative macro outcomes that I want to keynote, as achievements that Nigeria needs to keep going forward. Beyond these favorable macroeconomic outcomes, I want to acknowledge broadly based and deeply rooted sectoral successes as well. The cost-reflective reforms in energy prices and telecoms prices have yielded very positive, outcomes in, giving the Dangote refinery, for example, the space, to, eliminate a need to depend on the importation of refined products. It has helped the telecoms companies to come back on the bounce, and it has gone a long way to resolve a lot of our energy bottlenecks. That's So energy sectors, telecom sector, and the favorable exchange rate development has also given other sectors apart from energy and telecoms the space to recover. And here I'll mention telecoms companies, I'll mention, key manufacturing, activities like cement, you name it. A lot of companies that have been in crisis, particularly suffering from the exchange shock when the exchange rate was volatile, the theories, you can multiply the examples. Those sectoral interventions has underpinned the increase in the pace of economic growth. We last saw 4% growth in 2021 as our attempt to recover from the pandemic was aborted, and we've now seen 4% growth again in second quarter and third quarter. And projections are being made for us to end the year with above 4% growth rate. And the World Bank in particular is saying that the next this year, next year will be growing at 4.4. I congratulate the president and his team for these sectoral achievements. Finally, the interventions that the president has made at the subnational level in partnering with a long list of states, in debottlenecking, their intra-state transport system, supporting them with LNG buses, supporting them with agriculture, in particular crops, supporting the 19 northern states with livestock, in new livestock, all underpin the growth of GDP that we have seen. So this growth is being driven by sound corrective policy efforts, by sound sectoral interventions. I know the various trade groups of the chamber will have more to say than me, on some of these positive sectoral impacts. I've not been exhaustive. I had not even mentioned what has happened in aviation or what has happened in maritime, what has happened in ICT, a long list of positive visionary sectoral interventions by the president and his team underpins the growth. Right now, both the IMF and the World Bank are projecting that Nigeria's growth will accelerate, while they are projecting that global growth will decelerate. It's the first time, that Nigeria will be so projected to be likely to do better than the global average. In the past times, most of our growth efforts have been fed by favorable commodity prices. So this is the first time that, in spite of unfavorable commodity prices, we have managed to do the hard work to ensure that growth occurs and that growth exceeds even what's expected, what's warranted by the current global situation. Okay, maybe I should punctuate, the positives, at that level and address some lingering concerns. I have about one, the president needs to find the magic wand to solve the fiscal problems that Nigeria had before he came, but which he doesn't seem to have been able to resolve yet. Low revenue, particularly at the federal level. That the budget and the federal government keeps projecting high levels of revenue, but the reality puts a lie to much of the revenue projections. In 2025, we were hoping that the federal government would find 40 trillion to spend, but we were shocked to be informed at the Senate session that out of the 40 trillion, we only got 10 trillion by December. It's not a new problem. It had been a problem that the President Buhari administration, may God rest his soul, had grappled with rather unsuccessfully in 8 years. And it's a bit of a worry, that 2.5 years of President Tinubu being in the saddle, this remains a critical problem. I know we are going to have opportunity to listen to Mr. Oyedele later, who has been working on tax reforms. I know that one of the other speakers is going to talk about oil. But I would like to note that in 1 decade since the collapse of commodity prices, since the end of the oil boom, oil has never failed to disappoint us. Oil has disappointed for 10 years, and the likes of Saudi didn't wait for 10 years disappointment. By 2015, 2016, they had put legislations in place, a national transformation plan that will help them to survive beyond oil. Saudi produces more than 10 times the oil we are capable of producing, but they are looking beyond oil. I think it's time for government to do away with all the illusions we have about oil revenue and now concentrate on, beyond oil. Second is we have tax illusion in Nigeria. I am an economist, and I understand that our economy has been in a recession for a full decade, that our economy was at least $700 billion in 2019. If you look at the dates, reference date for the rebasing, it's dropped now to 250 billion. I'm not optimistic that you will find any significant tax revenue out of an economy that is in decline, that has just managed to find recovery after a decade. I hope that this message will not be lost on Mr. Taiwo and his committee. And I understand our DG is also a member of that committee. This is the wrong time for Nigeria to be saying things about, I want to raise tax revenue to 18%. Economy is just getting out of recession, for crying out loud. And to give the recovery a chance, it is the time to even give tax holiday. So I hope that the government can do away with this obsession about oil and taxes, and also do away about dependence on debt. We've become overborrowed to the extent that the federal revenue does not even cover the federal interest payment obligations. So look beyond oil, look beyond taxes, look beyond debt. Contemplate non-oil revenue, contemplate non-debt financing. And I don't know any economy that could be compared to Nigeria, whether you're talking about Saudi Arabia or you're talking about Brazil or India, who have made an headway without resorting on a large scale to equity issuance. I do not know why the Nigerian government prefers debt financing and does not even try to do equity financing at all. That has helped Saudi to forge ahead. It has helped India to become the 4th largest economy in the world. It has helped Brazil to remain the top 10 economy in the world. The president should consider non-tax revenue. Revenue not based on current income, revenue based on Nigeria's assets. What Nigeria owns could earn more than enough revenue for the federal and other tiers of government. And what Nigeria owns can help Nigeria to leverage equity. And I'm hoping that we will start on that path. Unless we start on those paths, I don't see you. So apart from poor revenue, is also the poor funding of capital projects. and it's also the weak attraction of foreign direct investment. Yes, reserve adequacy has been achieved, sevenfold increase in net reserves, purely based on current inflows on current accounts, remittances, and whatnot, not inflows on the capital account. So I see my three areas of concern is the poor revenue, and which I think that we should emulate, countries like UAE and Saudi, who do not rely on income taxation, but are a lot more buoyant in revenue than us because they rely on revenue from assets. And Nigeria needs to demonstrate that we know how to attract foreign direct investment. Our records in attraction of foreign direct investment has been very, very poor. And future sustainability of the economy will be assured if we learn to attract foreign direct investment. And where it starts is to come up with a list of capital projects that we want to finance with either domestic direct investment or foreign direct investment or PPP. We've paid lip service to those three since the new regime came. We've not done anything about it. We are more likely to go and issue debt in the Eurobond market than go and issue equity in the global market. And we have a vibrant stock market in which you only have private companies listed. None of Nigeria government's public companies are listed there. So come up with a list of companies that you want to raise equity for. The stock market just crossed 1 trillion, 100 trillion with no government issue. You have infrastructure, like, the airports. 40% of revenue in aviation worldwide is generated from terminals. We have none. And these are things that could attract heavy private investment. Those are my, areas, of reservation. And I'll try to move quickly to my assessment of the outlook as I try to conclude. Yes, grateful to God that Nigeria has witnessed 1 full year of very superlative improvements in economic outcomes. Improved reserves, stable exchange rate, even appreciating exchange rate, deceleration of inflation, and the broad-based sectoral, outcomes has led to acceleration of growth, which is projected by no less than the World Bank to keep, accelerating. But I'm hoping that in 2026, those positives will become even stronger. That Naira will get even more stable, stronger. That reserves, we can, if we've done sevenfold in 2 years, that we can do at least twofold or threefold in the next 2 years. So, and I am projecting, I said it when I had a point to do so on Arise TV on the 2nd of January, that 2026 is most likely to be a repeat of 2006, in which we saw a deepening of market liquidity across top market banks, bonds, name it, even reserves. But that was fed at the time by commodity price lock. This time, the trend that started in 2025 is fed by reforms, successful reforms, and I'm hoping that we can repeat 2026, 2006. So we saw the expansion, the stock market increased sixfold in 2 years. Banking deepened and the bond market deepened. Looking for the same, we've seen the stock market cross 100 trillion at the turn of the year. I'm expecting that it's going to double more than once in the next 2 years. Courtesy, stable exchange rate, improved reserves, and decelerating inflation. And I'm expecting banking, and
Ladies and gentlemen, please let's put our hands together for Dr. Ayodele Teriba. Dr. Ayodele Teriba is a senior economic associate, and he just gave us his reservations, his opinions, and especially policy options for government and emerging business opportunities. Dr. Teriba, I hope you are still going to be with us because we'd like you to participate in the joint question and answer session that we will have much later. Thank you so much for that beautiful.
I've listened to one of the speakers. I will be here. I will listen to every speaker. Thank you.
Fantastic. Now, touching on questions and answers, ladies and gentlemen, please, if you have questions, please, young lady, please come forward so they can see you. Wave the paper. Thank you. So if you have questions, please write your questions down so it makes it easier for us when we get to the question and answer session. Please put your hands together for Dr. Ayodele Teriba one more time. Now, while Dr. Teriba's session was going on, we were joined by the Deputy President of the Lagos Chamber of Commerce and Industry. Ladies and gentlemen, please put your hands together and welcome Prince Abimbola Olashore, FCA. It's so lovely to see you, sir. Happy New Year, sir. All right. Now, ladies and gentlemen, in the same vein, while Dr. Teriba's session was going on, the Chairman, Presidential Committee on Fiscal Policy and Tax Reforms walked in. Are you not clapping yet? Your tax will be times 50. Now, Mr. Taiwo Oyedele is here. Round of applause. He's very, very much present in the house. Lovely to see you, sir. Thank you for joining us. Now, while we were preparing for this, when I saw that he was coming, I prepared a speech. Sir, do I have your attention, sir? I said I was going to say, bear with me, please. I said I was going to say, I'm very excited and humbled to welcome you, sir, and to recognize you. Now, between last year and between mid last year and December, we heard a lot of stories. Particularly, people started saying that when they buy items or they order items online, that they will put the description as gift. It's all fun and games until a vendor will make away with your money, will not deliver the good, and you cannot prove it because it is what? Gift. I'm very, very sure that Mr. Taiwo Edele would give us very, very clear directives as to how the new tax policies affects every one of us. A round of applause for him one more time. He'll be taking a look at the implementation of the new tax system, implications for business and investment, new trends in the tax system, digitization, ease of payment, multiple taxation, exemptions. Somebody say exemptions. Somebody say waivers. For instance, now, because I'm welcoming him warmly, I'm sure that I'm exempt from tax. All right, ladies and gentlemen, we still have one more virtual session before we move to our physical sessions today. And so we have, and he's been in the wings waiting for his session. Please, ladies and gentlemen, I'd like to specially introduce, with a round of applause, please, your hands of course, Special Advisor to the President on Economic Affairs, Dr. Tope Fashua. He'll be talking about Nigeria's economic scorecard, agriculture, manufacturing, and services. A round of applause for him, ladies and gentlemen.
Thank you very much. And good afternoon, everyone. I'll try and go through this. You've asked me to write about scorecard, agri, and other sectors as well. But it's important for me to start by looking at the overall economy, okay, Nigerian economy. I think Dr. Teriba has spoken extensively about international aspects, external account, and external performance. But of course, as we all know, the projection for this year on GDP is about 4.5%, according to the central bank and other entities, including my, my humble office, that we're going to be able to achieve that. Even I will push a little bit more, and you will see why. Also, of course, we have a budget of 58.5 trillion for this year. We learned lessons last year, and Mr. President had to re-engage the National Assembly to repeat and reenact because the lessons been learned, and we'll be able to see some of those. Equally, there's a National Development Plan being finalized, which also will be made public, and we'll see what the intentions of government for the economy and for the people of Nigeria are. Inflation is projected, of course, we've chronicled that how it fell since December 2024, especially from January, and we're as at October. And I think a new number should have come out by now. Let me just check today, being 15. Of course, we know what the issues are with the recalibration of inflation, and then of course the MBS has already alerted us that the figure may spike for December for December, yes indeed, as a result of base effect. For obvious reasons, where we're coming from also affects the direction of play. However, CBN projects 12%. I think that from my own experience about comparator countries like Ghana, like Pakistan, Ghana is talking about 6-7%. So I don't think it's too far out that we cannot manage. Even though before this meeting, I was also in the NESG meeting, which kind of clashed with this one. And their projection for inflation was 16%. I think that's too pessimistic. Because again, it's about understanding the nature of inflation and understanding that indeed, all of the time, what goes up must come down. Even when you had 10 years of depression in the US and other major economies, it still came down eventually to where it is today. I'll quickly take a response a little bit to Dr. Teriba. I think the issue of 10 trillion and 30 trillion shortfall that was raised last year has been clarified, because at that point in time, a lot of reconciliations and enforcement takes place towards the end of the year. And that figure by December 2025, I believe, is going to be a lot different. Dr. Teriba spoke about equity and listing of assets. I believe there's something like that in the Investment Promotion Council. However, his stake is a little bit broader in terms of listing assets like stadia, like airports and so on, and getting concessionaires. Again, that is a space where there's some sort of fluidity. But I think what he's saying is that we should encourage foreign investors to come into those areas. Interest rates, the central bank has almost committed that, look, if inflation keeps falling, the MPC will start to reduce rate, as it were. Exchange rates, we've done pretty well. Naira gained about 10-15% throughout the last year, starting at about 1,550, 1,580, going down to 1,350. And I think I also saw where, the central bank also projects a stronger Naira. And this is why perhaps already reserves are accreting. And of course, reserves is about $45.4 billion as at the last time they announced, but the central bank projects 51 billion in the course of this year. So again, if you look at comparative countries like Ghana, inflation at 6 to 7%, that inflation was as high as 50% about 2.5 years ago. Equally, Pakistan, which Nigeria's economy mirrors a lot, their inflation is almost in deflation territory, and that's from 45%. So there's this Nigerian exceptionalism, sometimes which also comes to negativity. Some people are convinced that this country will not get better, but I think it's getting better as we speak. So that's as far as overall economy, monetary policy and co is concerned. I believe, of course, everybody has given kudos to the management of central bank under Mr. Cardoso. We can only hope that they will continue along this line, doing the right thing and managing reserves and exchange rate properly. On the fiscal side, of course, we have a tax law which has already gone into effect. And, even though I just saw one funny caption somewhere, there's no reversal of this policy, is still live. However, I think the litmus test is that for anybody earning 20 million and below, check your pay slip. If you are working in a proper company where they keep adequate records and they do the right thing, I believe that anyone earning 20 million and below should see some addition to their takeaway. It's also earn more than that the tax will move on. But then again, the whole idea of this is actually documentation and data. That's what the tax reform is about. And you see that it will not happen 100% on day one. We're going to be seeing regular compliance. For some people, realize that it's not worth it not to do the right thing. So I believe that that's going to come as well. It's about taking this country serious. Also, other aspects of the law are pro-poor. I see the concerns raised in some quarters about whether the tax reform discourages investors. Some people also suggested that we give our foreign insurance companies tax-free, which I think the local insurance companies are protested, say you cannot do that, in our own very abode. However, on the fiscal side, I believe we're going to be seeing some very good developments this year, especially because of the fiscalization partly that's being done, and also things like more advantages for manufacturing companies. Capital allowance is being given for some R&D work, some asset acquisition. As a matter of fact, this is the first time that the framework is targeting improvement in research and development. Equally, things like VAT input to be taken out of VAT that you collect, that to remit the balance to government. It's a bold move. Also, I wanted to say that on the fiscal side, of course, 58.5 trillion is what this year is about. But on the federal level, I still believe that that's, the estimate is quite conservative, to say the least. If you look at the budgets of states, you find out that most of them have increased by about 250% since 2023. So Lagos is budgeting 4.4 trillion. Ekiti, the smallest state, is budgeting about 400 billion. And most of them are not borrowing. Remember in 2020, by the end of 2024, we saw states paying down about 32% of their, on the average, of their global exposure. And I think that, this has put the states in very good stead. There's a lot of liquidity in the states and what they can do. And many of them are not borrowing. I remember the commissioner for budget in Lagos saying, look, we're not going to borrow. I remember the Ekiti state governor saying the same thing, Enugu state and a few others, which is good. So that's that. And of course, that's as far as fiscal is concerned. Other concerns, the discussion about manufacturing. What I say to people is that as of 1986, 87, 88, when we had some World Bank IMF program, and we devalued with the hope that exports will climb. This time around, and which didn't happen then, we didn't materialize per se. This time around, what we're seeing is a reindustrialization, perhaps because you can see the statistics on foreign health tourism, that the numbers crashed in 2025 by about 90%, thereabout, meaning that Nigerians are looking more at Nigeria, building the domestic economy. Investors are building things here that can substitute. In fact, a couple of days back, I was in the African Medical Center of Excellence that was opened by AfCFTA. And it's a wonderful project which is running side by side with King's College. We're seeing a lot of those kind of things are developing. So in terms of debt, for example, I'd like to say that, of course, what we're looking at, but the debt to GDP is still around 40% as we speak. I believe it's still sustainable. Contrary to what Dr. Sariba said about our budget, so is it Dr. Sariba or maybe Dr. Kale? This budget is not enough. It's nowhere near enough. Per capita, we have one of the lowest budget per capita in the world. And that's the reason why we must take ourselves more serious. So at 40% to debt to GDP, fine, that can still be leveraged. And of course, some of the ideas propounded by Dr. Teriba in terms of monetizing assets, well, I'd engaged with him on this before. I think one of the problems is it may be political in nature, because people will say, oh, now you want to start selling all the assets of the country. So it may not be that easy, but it's a lovely idea, which I believe can get some traction. We of course, on debt still, we have about 24 trillion to finance this year in terms of deficit. A lot of that is aimed to be gotten from the local market. But again, I think there's another conservatism at play when it comes to this, because if and when we begin to see results from the tax review that has been done, then of course we may not be having to borrow 24 trillion in 2026. Well, again, some of the good indices around is our trade surplus. As at November, it was about 19 trillion. Perhaps in December, we'll be able to accrete more to that, in which case we may be crossing 20 trillion in terms of trade surplus. And I think Dr. Kale mentioned that Nigeria is not decidedly a country where exports in terms of value always surpasses imports, which is a good thing. So, and again, one of the speakers had said that most of our fortune in terms of this trade we're looking at is actually driven by oil. It is not so. Most of this is non-oil, including manufacturing exports. Of course, a company like Dangote came and changed the game in the petroleum sector. And by now, he exports some of the products abroad, and sometimes he imports crude. But there was a report that came out recently, the August report, that actually shined, some light on this issue, to the extent that Nigeria's import has reduced. It wasn't forced down. It's about finding alternatives, and of course that our exports have actually increased to a very good extent. So what more is there? Our current account will do well. Our balance of payment, which clocked $6.8 billion in 2024. In 2025, hopefully we may land about $9 billion as well. So manufacturing exports has grown 67%. Basically, by the third quarter of last year, year on year. And these exports are 95. We increased our supply or trade with the rest of Africa by about 90% as well. On agri, what we're seeing is falling prices across the board, which is driving down food inflation and therefore bringing down inflation itself. I share Dr. Tariba's optimism that all things being equal, we actually should be able to get the single digits in this country in this year. Though farmers are complaining, but the general effect is that inflation is falling, which is good for every body. And Nigeria is trying to mechanize agriculture. About 2,000 tractors have been delivered last year. We're going to 10,000. Some other sets will be delivered this year. They are coordinating the ones that have been delivered through the Bank of Agric, and so those who can access them can go. Services remain the biggest chunk of the Nigerian economy as well, over 50% when you categorize it. What can we do? Somebody had recommended that perhaps it's because of things like our creative industry, doing much better, and so on and so forth. That's services. Equally, our banks and fintechs, they are the most aggressive in Africa. They are in most African countries as we speak, and even in some parts of Europe. Looking forward, of course, we've had 2 years of reforms. We've had 2 years of very painful adjustments for many, but going forward, the thing is to consolidate on our trade gains, okay, on these trade surpluses that we've been having, continue to encourage exports, not only of raw products, but also of refined products, that's very, very important. Secondly, to maintain the conservative approach of the central bank as it concerns in Naira. And now, the fact that we're getting close to $50 billion, the world will take notice and they realize that, look, this is not the same Nigeria of 2-3 years ago or 10 years ago, where we were finding it difficult having enough reserves to cover imports as well. Of course, remember that the imports have reduced as a policy in response to the ideas of government. Also, I would say looking forward, we should target that 12%, but look at in 2026 how we can even get better. But 12% is the projected average for this year. Also, we should target we are targeting actually 6% to 8% GDP growth in 2026 alone, away from the 3%, 4% region. And of course, to go ahead with a very transparent implementation of the tax law, because it promises to change a lot of things for this country. And I mean, I think Dr. Tariba said he doesn't believe that the tax will increase the revenue of government. I disagree with that, because to a large extent, the economy is still largely informal. I believe from my own studies that Nigeria has one of the biggest informal sectors per capita in the world, per the size of the GDP. And so part of what the review is trying to do is to say, you know what, you're doing a business, try and register. It's good for you. It's good for everybody. You don't have to panic. Nobody's going to be coming to your office to harass you. And in fact, that's one of the things that tax review is trying to do. So I believe that we should push ahead, because there's no big deal in, trying to aspire to some other African countries where they'll be able to take their tax to GDP to 18%. There's absolutely nothing wrong with that. Let's not deceive ourselves. I mean, we have our behavioral issues, and I think I sent an article to Premium Times on that. As much as nobody likes to pay taxes, nobody wants to pay his bit, but there's a limit where you draw the line and say, please, for demanding, because we all demand a perfect country where everything is working and all of that, you have to pay a bit of your share. But what we want is to be able to display largesse and throw money around without actually doing our part for the government. So essentially, well, I may be a bad proxy to ask this kind of question because I'm always positive. And if I look at all of these numbers that I've pulled down, whether it was on inflation, on GDP growth that have outstripped the projections of international banks and so on, looking at our low debt to GDP ratio and improving revenue to debt servicing ratio, I believe that with the trade surpluses, current account surpluses, and what have you, I believe that we should be able to do much better this year than we did last year. And we seek everybody's cooperation, everybody's understanding to ensure that some of these targets are not missed going forward. I believe that I could, and then let me say this lastly about the issue of dependence on oil. Well, let's not confuse it. Oil itself is about, oil and gas, it's about 7-8% of the GDP. Of course, there are linkage effects, but I think because of the velocity of money that can come there, we seem to have ignored the importance of that sector over time. And, I believe that we can do better. And of course, the fact that it controls the inputs that go into our budget process, what I wanted to talk about. It's confusing. When you say Nigeria will sell 1.8 million barrels per day at $64, someone takes the calculator and says, wow, Nigeria is making so much money. Look at this number of trillions of dollars they are making from crude oil. But it is not so, because Nigeria's own, out of all of that, it's about 40%. We're producing with venture companies, with production sharing contracts and so on. And so I'm proposing actually to some of the big men in government that, look, perhaps the left side of that budget, we worked on a little bit deeper to say where else are we expecting money apart from crude oil sales? Because individuals are the ones that, companies, international companies and co, are the ones that own majority of that money. So I think going forward, some of the lessons we are learning on budgeting is that there may be a good basis for us to sit down and rethink how this has been going. So anyway, long and short, I believe we're going to have a great year, and all hands on deck. Thank you very much.
For Dr. Fashua, that's a special advisor to the President on Economic Affairs. Would you still be with us for a little longer, sir? Because we'd like to make sure that you are available for the question and answer session.
Yes, that's fine. Thank you very much.
Thank you. Thank you so very much. All right, ladies and gentlemen, Dr. Tariba mentioned that oil and gas has proven insufficient over time. Dr. Fashua is also saying that the bulk of the money does not go to the government when we talk about how much money Nigeria makes from crude oil. So it raises a lot of questions, right? And one of the questions that it raises for me is, could it be that there are other things to consider? There are new prospects, there are trends, there are new challenges in the industry, that's the Nigerian oil and gas industry, that we've not taken cognizance of. Well, ladies and gentlemen, I am only equipped to ask the questions. So please put your hands together as I bring up a man that is equipped to give answers. And our next speaker to answer all these questions surrounding the oil and gas sector and how it affects our economy in 2026. Please put your hands together for the partner and client and market leader, PwC Limited, or PwC Nigeria, pardon me, Mr. Pedro Omotume. Please keep clapping. Keep clapping for Mr. Pedro, who's taking us through oil and gas sector performance and outlook. You're welcome, sir.
Thank you very much. Thank you very much, Madam Compared. Good afternoon, ladies and gentlemen. Thank you so very much for this session. LCCI, we do appreciate the invitation. I was told I have 15 minutes or thereabout. I'm not sure if I'm allowed to do like the other people who have done like 30 minutes, but I'll try and keep the time. I just noticed that a lot of people that were invited were doctor, and I'm not a doctor. So between me and the next person who's a professor, so I'm just a Mr. Pedro. Yes, thank you very much. The clicker, very, very important. Let me stress if it's working. Sir, please come back. Oh, the clicker, okay. Okay, fine. I should press this one. Okay, thanks very much. Okay, so we have 15 minutes. I try and make it as lively and as fast as possible. So let's start from the last comment. Nigeria is producing 1.8 million barrels a day. That's the projection. I think the budget is actually 2 million barrels a day. That's the budget. 2 million barrels a day. As at December, 1.4. As at January, 1.5 or 1.6 million barrels a day. All of that 1.5 or 1.6 or 2 million doesn't belong to the government, like the Dr. Fasha has said. You have joint venture operators. You also have committed oil. In other words, government has taken loans and they have pledged some oils to repay the loans. So when you back all of that out, you can now see how much it really comes. But I just want to clear that, okay? So a bit of context, and then, like I said, I'll try and run through this as quickly as possible. We've heard so much about critical minerals in the world, that the world want to move away from fossil fuel, okay? I think for most people here in the room, you will still be alive when we are using fossil fuel. So fossil fuel will still be useful in Nigeria, okay? So even this transition, I always tell people, Nigeria should transition with oil in mind. So even if we are going to go to gas or whatever, we need the money from the oil to do our transitioning. Okay? So when you talk about global emissions, Africa as a whole is just 4% of global emitter. So if you are really going to shift the dial, it is not, well, they say I shouldn't be saying that, but it will take time. So we still need our oil, we still need the pumping of oil, like one president would say, pump baby pump or drill baby drill. So the Nigeria needs to drill, but we are seeing shift in crude, and things are happening in the world. There's a global energy shift, there's global transition pressure, there's technology driven, and the policy and all of that. So one of the biggest things that happened in our industry is the attack of Venezuela. And somebody said, how does that impact us as a country? Not in the immediate, but something we should watch out for. Well, like you know, Venezuela has more oil than Nigeria. It's deep, plenty of oil, as close as Saudi Arabia. And a lot of the IOCs got their fingers burnt in Venezuela. So even though President Trump had a meeting with the IOCs in America, was it last week? Okay, and they said, we are not just going to rush back there because we got our fingers burnt. Eventually everybody got their fingers burnt. So they're not going to rush back to Venezuela. And somebody said, so why did Trump bump or take away the president, apart from the political reasons? The problem is, I don't want China to have access to the oil, so I need to protect it. Okay, but that's it, another topic for another day. So political tensions always shape the face of our industry. There's riots going on in Iran. Okay, how long would that go to? Would that lead to a change of government? And if there's a change of government, how would that affect crude? Would they be able to not sell their crude to the international economy? So we can never ignore geopolitical tensions. So in this industry, it's always important that we keep that in mind. Like you all know here, the price of oil is not determined by Nigeria. The other forces beyond us. Okay. So despite the trends, we see that petroleum products is going to be important. And people have mentioned about Dangote and the part of Dangote. As a country, we are happy that now we are no longer a major importer of refined products. My colleagues from the oil industry are here, but so that's kind of helped. The local politics around that, we can continue to debate that, but I think overall we all agree it's important that Nigeria can refine its own oil and not depend on imports from Europe. Okay, where do I want to spend a lot of my time? We all know Nigeria has a lot of oil and therefore 37.5 billion barrels. We need to make use of that. Now, whenever we talk about Nigeria's oil, and people say Nigeria is a rich country because we have oil, I say, please, that is not totally correct. Because if you do the arithmetics, if I what I call oil per person, take your 2 million barrels a day, for example. Let's even assume that what comes to government is 1 million barrels. I think it's 40% actually comes to government. So take that divided by the total number of your population. Then compare that to Saudi Arabia, compare that to Kuwait, compare that to even Gabon or Angola. Then how rich are you really as a country? Okay, so we are not as rich as we would like to think that we are. But it's good to have the oil, and we should make good use of it. Okay, let me look at some. So you are going to have these slides. I'm just trying to keep to my time. So let's look at key strengths shaping the sector. So we've seen the rise of what I call the indigenous giants, which I think is good. Post PIA, when we do the numbers, we've seen that about $6 billion have been invested by locals in the oil and gas industry. 6 billion, sir, yes. I'm going to show, I think I have a slide that shows you that. Of course, we've talked about the downstream transformation. We've seen what Dangote is doing. Before Dangote, there was the Dr. Fatano's 1,000 barrels a day. Dr. Fatano had a small modular refinery, which has now increased to 5,000 barrels. And then, of course, Dangote opened the floodgates. And then we now see more modular refineries and a few other persons who are interested in that. I think that is good for the country. So PwC did research about 7 years ago. We call it a refining revolution. It's out there on the internet. And we estimated how many modular refineries we need to have in the country for us to be self-sufficient. So I think right now, if I take all of the licenses that be granted, I think we're almost there. We've achieved our prophetic projections. Okay, we said the decade of gas, that is ongoing. There are a lot of initiatives happening, and I think it's something in the right direction. We've also seen policy and regulatory reforms. We talked about policy earlier on, but we've seen this actually hit the ground, executive orders by the president, and I think all of that has helped in moving the industry to the right direction. Obviously, oil and gas is important because that is the big baker of bread right now. We need the oil and gas to transform our economy. And I think that's why LCCI asked that you take this session, I believe. Also, there's technology and security advancement that's kind of helped. Over the last few years, we've had challenges with pipelines, but I think with the advancement in technology and security, we've kind of stabilized that. So these are the things we see happening in the industry, and we dig deep. Okay. So let's look at these numbers. So in the past, the IOCs was a major dominant player in the industry, controlling a lot of the production. But we've seen that has shifted. So today, 55% of the production is coming from your what I would call the locals, the company owned and operated by Nigerians. And I'm like, this industry, there have been Nigerians playing in the industry for the past 6 years. So they've actually have learned the ropes, from technology to the financing to the economics to all of that. So the Nigerians virtually in every chain, the Nigerians who can run an oil and gas company from the beginning to the end because they have the experience. And just to add to that, we're actually now exporting skills. There are Nigerians everywhere in the world working in the oil and gas industry. Okay, so the dominance of the IOCs is reducing, and one of the reasons is that because of the lack of change in our policy for a long time, the IOCs move their money elsewhere in the world. Because like I said, the dollar is amoral. The dollar has no religious belief. It's where it gets the best return. So they move their money elsewhere. And for a long time, we're not investing in the oil and gas sector until the locals started taking up the challenge. So while the IOCs are still here, we've seen that they are gradually moving out of what you call the land and the swamp asset. They're now moving into the deep and the ultra deep. Okay, where they're away from the local communities, and somebody say, look, you pass my shrine or you pass my grandfather's burial ground. They're now in the deep and the ultra deep. But that ultra deep is very, very capital intensive. So right now there are not many Nigerians who are playing in that region, but we know in the next 10 years, looking ahead, Nigerians are going to start playing in that. Once they can develop their financial muscle, they're going to go on and take on the challenge. So your big locals, the Seplat of this world, the Wandos, the Hares, they are taking on new assets and doing great things. So let me show you this slide. Where is this slide now? Okay. This was the $6 billion. Somebody mentioned, $6 billion. So Hares Holding acquired OML 27, Total's Shell and ENS sold out. And then, of course, Owando acquired the ENI assets. And you see the total value of those assets there. Chapal acquired the Equinor assets. Seplat, again, went after ExxonMobil. One of the ExxonMobil executives was here just now. I think he has left. That was the 1.4 billion naira acquisition. Okay, buying up all of the ExxonMobil shallow assets, and they've ramped up production since then. They just ramped up production. Of course, Renaissance, the new big boys in the room, took on all of the shell land assets, around 2.4 billion, and then just recently, Hess again bought the Merrins and Prom. I think that's the name of the shareholder, the 20% shareholder of Seplat. They bought their assets. So that's under 496. So add all the numbers. So it does mean that the guys in the oil and gas industry believe there's a future in Nigeria. And they're willing to put their money where their mouth is. Yes, I mean, is that the right phrase? Thank you. Now, you won't be putting 6 billion naira in a place if you don't think there's going to be returns. Yeah, that's a lot of money if you calculate that in naira. Oh my God. If I had that money, I'll just retire and go home, go to my village. Okay, so clearly, there's a lot of money here. And I believe the Nigerian entrepreneurs believe there's money to be made and they're willing to take investment. But if you see all of these assets, they are all still shallow assets. Like I said earlier on, they are land and shallow assets. We have not started going into the deep waters. And I think that will be the next challenge. Okay? My prediction, and I'm not a prophet, my prediction in the future, the Nigerian companies are going to be acquired. They're going to be doing mergers and acquisitions like we saw in banks. They're going to come together. They're going to be stronger so they can go on to the next level. I think that's going to be the next phase of the evolution of the... Okay, so the deep waters are going to be the next frontiers. That's what this slide is telling us. So the policy drivers and investment drivers that we've seen, the PIA was good. That took us 20 years to achieve. 20 odd years. I remember I was a young boy in audit, and we kept on writing to the IOCs, the government is going to reform. We said that for 20 years, and it finally happened. Okay? The NUPROC, a lot of reforms. Recently, there was a change in leadership, and the new sheriff in town, she and her team are moving out to continue that reforms. I think it was 2 days ago, 50 new oil blocks are out for bid. For those of you in the room who have some money, if you go to NURC portal and you want to make money in this industry, please go ahead and bid. And you need PwC to be your consultant. I'm here to help you. If I may advertise myself a little bit. So I think the transition, I should see him afterwards, sir. So I think the transition is ongoing. There's a lot of confidence in the economy. We're going to use gas. We've seen a lot of investment in gas, in the gas sector across all the value chain. And for example, there are a lot of guys who are doing a lot of things in that space. And I think that the government is encouraging. So one of the things I can say, I'm not a politician like the previous guy, that in the oil and gas sector, we see significant improvements. Significant. From just the mere production numbers alone, we've seen significant improvements. Okay? Now, of course, that costs money. Security, that we say the sector is more secure, more production, but that costs money, okay, to ensure that the pipelines are safe. But I think in terms of, if you're an accountant, I think there's more value than the cost overall for the country. Okay, my time is running up. Key challenges and risk. We've talked about this. I think one of the speakers talked about this, the budget versus the target. How do you achieve that? How do you deal with the crew theft? How do you ensure that this peace that we have in the industry continues for a long time to come? It's going to be something we need to deal with. Infrastructure decay. The pipelines are aging. They are falling apart. We need to invest in it. Whether we're going to use, like Dr. Tariba said, the equity method, or we're going to use, like the SA said, government continues to finance it by itself, but we need to invest in our decaying infrastructure. I'm not sure how much more we can produce if we don't invest significantly in that. So the relative underinvestment has hurt us for a long time. And right now, with the IOC divesting and the indigenous taking over, we see further investment, and we're going to see more investment in that sector. We don't control the rest of the world, so we are exposed to global volatility. So, for example, the budget is based, I think the budget is based on 64 naira per, or 60 something naira per dollar per price. We, PwC, think that the oil price is going to drop to 55 by the end of the year. So if that happens, there's going to be a shortfall, and government needs to think of where the shortfall will come from. So outlooks, opportunity, and strategic projects. The global demand, there's going to be increasing global demand for oil, So within that sector, we continue to do well in the long term to come. There need to be government reforms, continuous reforms, and sustaining the reforms. And of course, the use of technology. Technology will be much more important in this sector in the long term. So I think my time is up. The slides, I'm going to leave the slides for those who want to read through, and I'm available for more questions or any questions if there is. Thank you very much. My pleasure.
Thank you so much, sir. Please keep clapping for Mr. Pedro Omotume. All right, ladies and gentlemen. Now it's time to know if you'll be tax exempt or not. Please, we'll be bringing up, we were supposed to have ICO Capital speak, but I'm going to shift that a little bit because Mr. Taiwo Edele's schedule is very tight. You can understand why. He will be explaining a lot what the new tax regime is. So ladies and gentlemen, please, let's put our hands together and bring up stage the Chairman Presidential Committee on Fiscal Policy and Tax Reforms, Mr. Taiwo Oyedele, as he speaks to us about the implementation of the new tax system and its implications for business and investment. Please keep clapping, make him feel welcome. You're welcome, sir.
Thank you. Thank you very much. Good afternoon. So the leadership of the chamber and distinguished ladies and gentlemen, I have just about 15 minutes because I need to run. So I don't even know what I should say now. Where is the device? Where should I point to? Okay, it works. So I'll quickly talk to you about implementation of the new tax laws and implications for business and investment. The context for the reform is that we have a broken fiscal and tax system, where the system was no longer conducive for growth. We're taxing our poorest citizens, and we have many distortions in the economy created by the tax regime, including some people are operating in the free trade zone, not paying corporate taxes. They produce and sell in the domestic market to compete with those who are paying taxes. They can't survive. We have instances where we tax capital and investments, including, for example, if you didn't make profits, you were meant to still pay what we call minimum tax. You were essentially paying out of your capital. We also have instances where you invest in assets, you pay VAT, and those VAT are not recoverable, thereby increasing your cost of doing business. We have taxes on basic consumption like food, as well as education and health, and that doesn't seem to add up. So when Dr. Teriba said that the time for the reform is not now, I was a little bit confused, because because his point was that the economy is struggling. And the reform is saying the economy is struggling because there's excess tax burden. So let's take that burden away so people can breathe. For example, small businesses, if your annual turnover is more than 25 million, you start paying taxes. This new law says don't pay up to 100 million. If you are a low-income earner, once you earn more than 30,000 naira a month, you start paying taxes. This new law takes it to about 100,000 naira a month. I would have imagined that we say we should have implemented this a long time ago. And we should all push for this to be implemented like yesterday, not to delay it. Because every day you delay it is you allow the pain to continue. So we have the new tax laws. What are the key features of this reform? One is to ensure fiscal equity. Let there be fairness. Those who make more money should pay a little bit more. That's what is done everywhere in the world. Otherwise, you would expand inequality and worsen social discontent. Economic growth. How can we use tax as a lever to facilitate growth? If I have 1 million naira to invest and there are all manner of taxes, then it diminishes my ability to grow. But if I'm allowed to use that money for investment with a lot of tax credits, input claims, then it's better for me and therefore it's better for the country because I can employ more people and all of that. For example, corporate tax rate in Nigeria is quite high. This reform wants to reduce it from 30% to 25%. The minimum tax I told you about has been removed. Competitiveness is another area. How can we become more competitive? Both locally, because sometimes we can't even compete in our own market. You bring products from outside Nigeria, you do the freight, you do even sometimes demurrage, insurance, and it still lands here more affordable than the one produced here. You know, so that's not sustainable. We also want to be able to compete within the region and globally. And there's tax harmonization. Officially, there are more than 60 taxes and levies that businesses and individuals pay. Unofficially, nobody knows how many there are. We know there are more than 200. This new tax reform law says all of them combined, local government, federal, state, should be a single digit. Like if nothing even excites you in the whole tax reform, that should be sufficient. So this is to try and bring some sanity into the tax system. The Supreme Court said the federal government cannot dictate to the local government and the state on the taxes they can collect because it's in the Constitution. So we used to have this law that we call approved list of taxes and levies collectible acts that has all these long lists of taxes. So this new tax reform law has repealed that law. In place of that, we drafted in conjunction with the Joint Revenue Board, where you have all the states, we drafted what we call a tax harmonization law for subnational. And states, the idea is for states to enact it for themselves, because that's what is in line with the Constitution. And the states have been enacting it. Those that have been following our communication, you would have seen. Even as I was coming here this morning, Kwara, they just signed their own. Before then, we had Ekiti, Kano, Zamfara, Anambra, many states. This level of progress excites me, but when all you see is just negativity, it's difficult to reconcile. It's like we want our country to be better, but we're doing the opposite. I don't understand, honestly, and we really need to think twice, because it's not enough to pray. If you pray and fast, while your actions are contrary, God will not come magically and deliver a tax law. When you just wake up, you just see it middle of the road. It has to be human beings that will do it, and it will never be perfect. If you give us, my brother Don Pedro just said that it took us 20 years to do PIA. Is it a perfect law? No. 20 years. Kids that were born when they thought about it were getting married by the time it was passed. So progress in life and for humanity is incremental. You start and you get better as you go along. So tax harmonization is one of the areas we're most excited about in this reform. We didn't even stop there. We also wrote to the National Assembly recommending amendment to the Constitution to address this issue of multiple taxation, because many of them are actually included in the Constitution. Radio levies, TV levies, bicycle tax is there, even wheelbarrow, produce tax, produce tax. So again, amending the Constitution is not a piece of cake. It takes time, but that process has started. I think if we just continue to make progress, we'll get there sooner rather than later. There's modernization as well. You would agree there's nothing you do today, even just from selling stuff. If you don't use technology, you're missing a lot, because you then lose efficiency, you can't compete. So there's a lot of modernization in the new tax reform to make life easy for everyone. For example, there's this thing about harmonization of identities. So I, as one person, I'm a taxpayer in Nigeria. I have 3 different identities. It's not helpful to me, neither is it helpful to the system. I got one from LRS because I'm resident here in Lagos. Got another one from Joint Tax Board. And then FCTIRS said I should come and collect another one because they see me in Abuja frequently. But I'm one person. So in most countries, you just have your social security number and it counts for everything. So if you live and work in Lagos and you pay your taxes and you have tax clearance certificates and you want to go and buy land in your village and it's not Lagos State, they will ask you to pay tax again, because you also don't have a means of confirming whether you have paid. This is one of the things we need to address using technology. There's a significant amount of tax evasion in Nigeria. So there are people who are paying taxes in line with the law, trying to do their best. Unfortunately, we run a system that allows others not to pay or not to pay correctly, such that those who are trying to do their best are now disadvantaged. Somebody is selling an item, they say, government says you charge VAT, and they put VAT. And the next shop does not put VAT. The customer will quickly reject your invoice and go and buy from the next person. By the time you can't pay rent for the shop, you can't feed your family, and you can't pay your staff, you start asking whether you're supposed to be holier than the Pope. Now, we need to think about our society. What do we want? Do you want to reward bad behavior by looking the other way? Or do you want to have a system that has some level of sanity? Decide who should be exempted, decide who needs to pay. And once you've set that threshold, everyone should pay who needs to pay. Not one person should be above the law. That's how to build a society where there's equity and fairness. One of the ways we're doing that under this reform is technology. Many of us in the room will be familiar with electronic invoicing. If you sell and you don't report, the system will say, for every transaction, there has to be a buyer and a seller. If you can't find one of the 2 persons, it will flag it. If you find the 2 persons but the numbers are not the same, it would also flag it. One of the things we are hoping will happen as a result of this is you will have less worry about tax audit. Because today, the way the tax authorities do their audit is they're not sure whether you're lying or not. So they keep coming back. When they see another thing, they come back again. But if the system is reliable, we do what we call risk-based audits. If you are doing the right thing, you will not need to deal with audits. If you're not doing the right thing, you have some explaining to do. So that way you dedicate more of your effort into growing your businesses rather than trying to attend to the tax man. Of course, sustainable revenue is important. It's very easy and popular to say, what's government doing for us? Government is corrupt. We should not be paying taxes. All well and good, but it still doesn't solve our problem. We have 2 significant and fundamental challenges. One of it is how we spend our revenues, including tax revenue. Another one is that the revenues themselves are small. Even if you eliminate corruption and waste, Nigeria will still be a very poor country. The budget for 2026 is about 58 trillion for the federal government, all the 36 states and the FCT about 35 trillion naira. When you add up and you convert to US dollars, is barely it's under $70 billion for a country of 200 million plus people. The transport authorities in New York alone, it's over $20 billion. Not even New York City, not even New York State. South Africa, in last year, collected from personal income tax alone over 60 trillion naira equivalent, just personal income tax. And about 60% of that was paid by the top 1.5%. In other words, the top 2% in South Africa paid more than the remaining 98% of their population. So they didn't collect that amount by taxing their poorest people. The exemption threshold is actually very high, much higher than ours. Now, in that same period, Nigeria barely collected 2 trillion naira. How do you reconcile that South Africa collected 60 trillion and Nigeria with 4 times the population collected 2? How do you explain? There's poverty in South Africa too. The unemployment rate is 30-something%. And I even say to myself that if you take the top 60 million people in Nigeria, I believe that their income per capita will be comparable to the 60 million people who live in South Africa. If we can't collect 60, why can't we even collect 10? Why is it 2? So if a country has 60 trillion naira from personal income tax, the ability to provide social services and infrastructure is much better than 2 trillion. Now, when government is unable to raise revenue to run government, they will print money to spend. After all, they printed it before, isn't it? Printed almost 30 trillion naira. When that happens, we call it taxation without legislation, because you can't stop government from printing notes. And when they print, the money in your wallet, pocket, and bank account falls proportionately to the amount they have printed. Is the equivalent of paying taxes, except that taxation is regressive. It punishes the poor and the middle class far more than it does with the upper class, thereby widening the already widened inequality. The reason why it punishes the low people more is because they don't have assets that can protect them from inflation. They don't have properties. They don't have dorm accounts. So if you really want a society that works, it's in our enlightened self-interest to allow the tax system to work. Like they say, the poor man cannot sleep because the poor man is hungry. The rich man also cannot sleep because the poor man is awake. That's the way we live today. Many of us who are not low income, we are not middle class, we are upper class. Our homes are not very different from people in prison sometimes. They're afraid. There's a tall wall, you put something on top of it, with electricity, you go and look for dogs. Why are we doing that? Countries where they have less of an issue with inequality, even when they pay high amount of taxes, they tend to do better. So I'm not underestimating the importance of prudence in public financial management. I'm saying that the two conversations have to go hand in hand, and it's not one before the other. They have to be solved together. So we have incentives under the new tax law for businesses. We call it economic development incentives for priority sectors. We also have a lot we have done to attract investments, both domestic and foreign investments, from capital market to the real sector, and so on and so forth. There was misinformation about capital gains tax sometimes last year that got so bad, the capital market lost about 4.6 trillion naira in just one day, because some people developed the narrative, a market that has gained year to date at that time 50% is a market that was doing very well. There's no market in the world that gets every day of the year for the whole year. There'll be profit taking, there'll be corrections. And once there was just a bit of profit taking, they say, is it capital gains tax? They repeated it consistently for 5 days. It got to the headline news. It was primetime news on channels and Arise. Some people had X space, and they said bloodbath in the capital markets. By that weekend, stockbrokers were calling their client, people are selling, won't you come and sell? On the 11th of November, which I call the Black Tuesday, people rushed to the market to go and sell. The market lost 4.6 trillion naira in one day. You know, this is the danger of misinformation, right? We collected the data from the market. It turns out that the average value of a deal for that day, I think we had about 20,173 deals. What about 25 billion naira? The average size of a deal was just about 1 million. The new tax law exempts you if you sell up to 150 million. People who were selling 1 million were rushing to the market to go and sell because nobody said to them that they have been exempted. More than 99% of investors in the capital market are exempted, no conditions attached. The remaining less than 1% are exempted with condition. The condition is when you sell, please reinvest and reinvest because we want them to take a long-term position in that market. So actually everybody's exempted. You know that our younger people, they have over $60 billion in virtual assets. Crypto here, stable coin there, that's what they are buying. I don't know if there's any single one of them that's invested up to $10,000. It's usually $200, $150, those things add up, right? In the capital market, the average age of investor is over 50. There are old people like me that are there. Yes. The young people are not investing there. And we're not telling them, instead of us to tell them that the capital market has now been designed for you, you can invest there and you won't have to pay tax. This is your crypto and virtual asset. It's even taxable. But when you come to the market, you won't pay tax. But we scare them away with our narrative. There's 30% tax on the market. The danger of misinformation. And I was speaking at an event yesterday where I said, you know, there's this concept of prejudice premium. If you Google anything about Nigeria, you find a lot of negativity. There's no country that is perfect. But we're just one country where we tend to amplify what is not working a lot. In fact, if you have good news to say about the country, you have a lot of enemies. Yeah, if you doubt me, just go on Twitter, if you're on any of those social media, go and post there that this tax reform is actually good for Nigeria. Yeah, and see what will come back 5 minutes and come and see the way they will attack and abuse you. Right, so we looked at the data for the capital markets, and those things are tiny. I'm sure you get copies of the slides. And foreign portfolio investors almost entirely exited Nigeria by 2022, and now they're returning. You know, and that's because they see that the fundamentals are good and the reforms are very attractive and competitive. So the other highlights, I won't go through them one by one. They're just there for your reference. A lot of changes. The implication is that these reforms will facilitate economic growth and shared prosperity. Dr. Teriba was saying, you know, why do you want to increase revenue, tax revenue to GDP ratio to 18% when the economy is just trying to struggle? That projection of 18% tax to GDP ratio is over the next 3 years. And where are they going to come from? I'll tell you. Number one is by closing the tax gap. In other words, you're doing business and you're paying your tax. Your neighbor is doing it and they're not paying their tax. this new law will make them pay their tax so that both of you can compete on an even playing field. And that is good for the society. So as the government is making money from that, government is actually fixing a bigger problem, in my view. Number two, no, it's okay to say amen, but it's in the law already, right? Number two is rationalization of incentives that are distortionary. I gave you one example of the free trade zone. Free trade zones are meant to be a regime that allows you to set up within a particular jurisdiction and compete with the rest of the world, right? For example, you don't need to deal with many regulators, you don't have to pay corporate tax, infrastructure is better, even though it's developed by them, but it's almost like it's an ideal thing we want for our entire country. But we can't fix the entire country at once. It's okay, let's start with this special zone. Operate there and compete with the rest of the world. Not to operate there and compete with our local markets. Like, you can't even add up the math. You don't need to read the law to just know it doesn't make a lot of sense. We also have incentives where if you are connected, you know the powers that be, you get waivers, and the other person can't get waivers. That we're also rationalizing as well. A lot of incentives require discretionary powers. And that's also not how to run a society. Let the rules be clear. Let everybody be eligible once they meet the conditions that have been clearly stated. We also have those ones there as well. So I told you two already, right? Money will come from ensuring everybody who needs to pay, pays. Second, by cutting down on the wasteful incentives that create distortion and make government lose revenue. And the third one, which is the most exciting, is that revenue comes from growth. If the economy grows, imagine a company that is making 10 billion naira turnover with 1 billion profit. If they make 100 billion turnover with even 5 billion profit, just collecting 25% of that is more than 30% of what we collect currently. So the biggest area for revenue growth is from economic growth, particularly when it is inclusive. So these were the things. We use a lot of modeling for what we did. We use a lot of data. There's nothing we did that was just random. Everything was data driven. So even when people say, the exemption for for low income earners is too small. Why can't they do X, Y, Z? Rent, they should have made it 5 million. The data was different. I saw somebody was doing some analysis, said, poverty threshold is $3 a day. What are they talking about? Sentiment. The $3 a day is purchasing power parity. You don't convert it using market exchange rates. But for Nigeria, there's even the Living Standard Survey, which the MBS did in conjunction with the World Bank. The World Bank themselves confirmed that that is more reflective of our reality in Nigeria than the global one. That's the data we used. Many people in cities, Lagos, Abuja, Port Harcourt, Kano, and those who are mostly online, many of them, in my view, are so completely detached from the multidimensional poverty of our people. Many of them can't relate to the fact that there are people who can't get 1,000 naira in a day. Because they just go to a restaurant and they spend 30K at once. They don't understand. I have one small NGO, and we're going around, and there was, we got to one village where the boy had been sent home. Couldn't write the exam because they needed 2,500 naira. So as part of our scholarship, we, of course, it was easy to give $2,500. Sorry, naira. Yeah, maybe we should be giving them dollars, equivalent in naira. So that's how the boy ran home and called the mother. So the mother came, knelt down, and broke to tears and said that nobody has ever offered help to them before, and that they just lost the dad. That's her husband, just a couple of weeks ago, before that time. So a boy wasn't going to continue their education because of 2,500 naira. And the people who are in jail because they couldn't find bail of 5,000 naira, right? You know, when I was writing my own secondary school exam, sometimes back, because I'm now an old man, I needed 495 naira to pay for everything for my final secondary school exam. You know, for those who know the Yoruba name, Taiwo is a twin. So I have a twin sister. My entire family, plus myself, I worked in the village. I'm from a very strong Christian family. So we go to school Monday to Friday. We worked on Saturday. We believed in the village at the time was a sin to work on Sunday. So we didn't work on Sundays. So, and since I had to be in school Monday to Friday, I went to the farm with other people to help them do their farm work so they could pay me. I earned 5 naira per. You know, you wake up 5 a.m., you come back when it's dark, 5 naira for the day. So the entire session, the money I saved was not enough. My parents couldn't raise the balance. We're already considering, you know, what should Taiwo and Kehinde do before some associations of junior workers in my village. They were working at Ajaokuta. Ajaokuta is very close to my village. So they decided to contribute. They didn't even know about any of this. They just, in their association, said, let's sponsor, let's give scholarship to the best students in our village school. That's how they contributed 500 naira. Wrote to the principal. We have 500 naira for the best students in the final year. Principal called me. You are the best student and you have won a scholarship of 500 naira. I was so happy. They said, but we can't give it to you because we need your parents. So they declared lecture free in the village secondary school, called dance troupe, invited the KBST. This was a very serious matter. There was a ceremony to present this 500 naira. You know, even though it was a long time ago, 500 naira at that time is the equivalent of about $20 now. It's still not a lot of money, but my family couldn't raise it. And what I was saying yesterday at an event is that if not for that 500 naira, I won't be in front of you today. I would have considered other options. Certainly, I'll be a very successful farmer in the village. With plenty of wives. Two issues I wanted to bring out from that. One, sometimes you are comfortable, you don't know it, and you underestimate how hard it can be for other people. So when we say we're exempting 1 million naira per annum, you say, that's the money they use for a club. That's at your level. Number 2 point is sometimes also, you know, when I was thinking about NEL Fund, I said to myself, if only NEL Fund had been around when I was a kid growing up, you know, all my siblings would have gone to school. Of course, it was 500 naira we got, right? They paid for only me. Yeah, because as a boy, they would have preferred to do that, right? That was the tradition at the time. Plus, I was the best student anyway. So imagine if we had NEL Fund and we had paid for everybody to go to the university, you would easily pay back 500 naira, you know, no interest, nothing. So in this reform as well, there's a provision to ensure that there is consistent fund flowing into the NEL Fund. Right. So, I'll try and close now. So these reforms will benefits small businesses, large businesses, low-income earners, even high-income earners will benefit. Because if you are a very, very rich person, chances are that you make your money from running a business. So if we ask you to pay 1 million naira more in personal income tax, and your business gets 10 million naira more in reliefs, allowances, and credit, the biggest relief in this tax reform law, people haven't even paid attention to it, is input tax credit on assets and services. So if you operate in a service sector, you've never been able to claim any VAT before because the law didn't allow you. From this month, we're already in it, from this January. If you now spend money on assets, whether it's a laptop, whether it's even a car, whether it's even you are buying a plant, equipment, whatever it is, and services from telecommunication to when you travel, anything you can think of, buying softwares, and it has VAT, you can now claim it back. You can now claim it back. And what we've also done is because refunds, tax refunds have always been very hard in Nigeria. That's because when you pay money to government, they share it without leaving anything behind. So this new tax law says before government shares, they must ask the taxman, are we owing taxpayers? The taxman will say, yes, how much? This is the amount. That amount has to be set aside first before we share, because to be honest, that amount is not revenue, it's a liability. And the law says for VAT, you must be paid within 30 days, no questions asked. So now, I'm not saying this will be perfect from day one, but we have now created the legal framework to make it possible. All that we just need to do now is the will to do the right thing. One of the other things that are very important in the new reform is the creation of the Office of the Tax Ombudsman. Imagine our 20, 30, 40 million MSMEs. Many of them have no capacity to hire accountants. They can't hire lawyers or tax practitioners. They're also not finance people. They don't have to be. They just want to do business. When regulators and tax officers show up, Oga Madam, you never pay withholding tax, 5 million. Basically, what's even withholding tax? Now, you don't understand what they're saying. You don't have the knowledge to defend yourself. You don't have the resources to hire experts to defend you. What do? It's a natural default reaction. First, you get angry, you think about fighting, and there's something will say to you, you can't win this fight physically, because they're probably even there with the police with guns. So you then negotiate. Oh, God, help me. You usually get a private account. We have to pay 2 million. The official account where you pay maybe 200,000. They give you receipts, allow you rest for about 6 months, change the people on the file, new people show up, because you know what you paid is not legitimate. You can't go to court. And that exploitation continues. We essentially left the majority of our population trying to live legitimately out in the cold without protection. This new law has stopped that. The Office of the Tax Ombudsman has been created to help taxpayers, including beyond taxes, even regulatory fees. A regulator will just wake up and say, we have increased our fees, and you seem not to have any choice. Every single thing that the Ombudsman does for you is free of charge. We're having a meeting with the Tax Ombudsman just last week. They are already setting up, including toll-free. You don't need to pay to call them. You don't need to speak English. You don't even need to write. Just call and speak, and help will then be on the way. So we believe that this is the way. The strength of a society, of a nation, is determined not by the strength of its military, but by how you treat your most vulnerable. So, what should we do? This is more than just tax. It's a reset of how we run our society. It just so happened that tax is at the heart of that social contract, but it's all linked together. So we should plan. It will affect people. And when I say affect, it's positive. It doesn't mean it's negative. But you just need to let people know processes, technology, and how you execute. So what should you do? The first thing is to seek to understand. If you run with the headline, you will be wrong 99.99% of the times, which is equal to always. Now I have realized, I used to think that the people in the media were my friends. When I was in the private sector, we're doing annual capacity workshop, you know. As soon as I got to the public sector, their incentives became different. They wanted to sell their stories. And they thought about what is it that the people are buying. Since people buy negative news, they sold it wholesale. And they continue to do that. Yeah. They don't even ask for money. It's free. The reward for saying misinformation in Nigeria is very high. And the risk is near zero. Right? People say, oh, let's speak truth to power. I say, actually, you know the truth of the matter is in Nigeria, it's so easy to speak truth to power. Go on TV now. Say government is corrupt. We don't know what they're doing with our money. We can't trust them. You leave the studio, nobody has time for you. What is hard is to speak truth to the people. When you see the narrative and the sentiments and you go against it, it's hard. But without that truth, we can't move forward. So seek to understand. Don't run with the headlines. Mind the gaps, because there are also obligations on your part. Declaring your income honestly is an obligation that you have. If you need to file returns, filing it by the deadline is your obligation. So you must be mindful of those obligations, keeping proper record. You can't go to the taxman and say, I paid VAT, trust me, I want refund. Nobody pays based on trust. You need to keep the records. And then strategic positioning. Find what's in it for you. And there are plenty of stuff in this new tax reform law for everyone. Find yours and take advantage of it. You know, I was also saying recently at an event that there are companies, I don't know of any in particular, but I know there are companies where the payroll managers and the accountants just don't like this tax reform. And therefore, at the end of this January, they will continue to tax people as they were taxing them before in December. Those people will not get the benefit of the tax reform. It will not be because the tax reform is bad. It will be because someone who needed to do something about it has failed to do so. This was one of the reasons why we put up a tax calculator on the committee's website, fiscalreform.ng. It's important that you go and download. You don't even need to download, just keep the link. Calculate your own tax there and keep it. Because for 98% of workers, private and public sector combined, their pay would increase because their tax will come down. If at the end of the month, you don't see increase in your pay, you go to the accountant or payroll manager, what has happened to us? You also have that responsibility to play your part. That's part of taking action. These tax laws, people will say, we can't trust government. I say, yeah, maybe we can't trust government. But almost everything that the new tax law offers you in terms of benefits, they are self-activating. You don't need permission from government to do it. You just need to do it. But if you fail to do it, it won't do itself. Right. I saw this morning that they said one of the fintechs said they will start charging VAT on money transfer because government asked them to do so. And they say the commencement date is 19th of January. That's what I've been dealing with this morning now. And that is wrong. That's wrong. So VAT was introduced in Nigeria in 1993, over 30 years ago. If you charge a fee, there's VAT on it. If you charge commission, there's VAT on it. So if you transfer money using USSD, there's a charge of 20 naira. On that 20 naira, there's VAT of 7.5%, which is 1 naira 50 kobo. That's what they were communicating. No? Before we knew it, people were already calculating. If I want to transfer 100,000, government will take 7,500. What kind of stupid government is this? And because it's bad news, it has gone viral so quickly. By the time you put the correction out now, it won't go viral. You know, less than 10% of people who saw the negative one will see the correction. The same thing they did with, they're going to debit your bank account. We've been in January now, they've not debited anybody's account. So, as we all agree, that is the only country we can truly call home, and that we need to do all we can to see that the country becomes a country we can truly be proud of. Anytime I see what Mr. Donald Trump is doing in the US and the embarrassment he's creating for many of us, including Nigerians. First, he started by saying 1/3 of Nigerians in the US live on welfare, like we're a burden to the system. Now they came back, your visa, let's reduce the duration. Now the last one, we're not giving you, green cards. It's a reminder that you can have another passport, but you never feel like you're at home. And there's nothing wrong with relocating if you want to. Some of us don't want to. And some of us can't, even if we want. And that's the majority of the Nigerian people. For their sake, let's make Nigeria work. Thank you very much.
Thank you. Well, LCCI, President, sir, one full cow.
I agree.
All right, I want to quickly take a photo session before Mr. Edele leaves. So let's quickly do that now. Please, I'd like to have the President of the LCCI, Engineer Leye Kokoluyi, as well as the Deputy Presidents, Prince Abimbola Olashore, FCA. I would also like to have the immediate President, the immediate past President, that's Mr. Gabriel Idaosa, as well as Asiwaju Dr. Michael Olawale Cole up here. Can I also have Mr. Pedro here? And the DG. Dr. Chin, okay, she's here. Can I also have Ogonna Chukuma here? She's representing Aiko Capital. Can I have Ogonna Chukuma here? Is Aiko Capital Limited here? She's supposed to be in this photo. Yes, please. Okay, I'd like to have, for the second session, honorary live vice presidents, that's Engineer Mrs. Olumaduka and Mrs. Folashade Bebentin Young, to join this session, please. No, sir, don't leave yet. Don't leave yet. They're joining you. They're joining you. Can I also have the president of CIOD, Mr. Tunji Oyebamji? Mr. Tunji Oyebanji. Oh, it's Otumba. I'm sorry, I got Mr. Otumba Tunji. Be careful, sir, so that I will not kill two cows. Oh. Finally, after this, please, can I have all sectoral group chairpersons? All sectorial, honorary, please. Wow. So I failed. Now everybody's saying be careful. Please tell me be careful when I'm coming down, please. All right. All sectoral group chairpersons? All right. Yes. Are we done with this session? Okay, all vice presidents, please. Saladi Smith, Mrs. Olajumoke Fashanu. I saw her earlier. Engineer Kwemi Aminu, Mr. Kola Aderibigbe. Photographer, did you get Saladi Smith? Yes. Okay. All right, yes. Mr. Edele, would you be able to join? I will try to join. Please, a round of applause for Mr. Taiwo Oyedele. Keep clapping. That was insightful. That's the Chairman, Presidential Committee on Fiscal Policy and Tax Reforms. Now, we're supposed to go into question and answer sessions, and we have some persons online. And to be honest, can I have the list of questions? To be honest, there were quite a lot of questions that came in. So I've been assured that Mr. Edele would try to join virtually so that the questions can be attended to. All right. Do we still have Dr. Teriba and Co. online on the call? Do we still have them on the call? Are they still online? Oh, fantastic.
Very much so.
Oh, thank you. It's nice to see you again, sir.
Thank you.
All right, we're not taking questions anymore because there are a lot of questions here. A lot of questions. Okay. Now, this first question, let's start. Please, can we settle down, please? Can we have one house? Thank you, ladies and gentlemen. Now, this is the first question. It says, how does a whooping 10% tax on interest? Okay. I'm going to hold off on tax questions for a second because Mr. Edele has not joined the line. Or has he joined? He has not yet joined. All right. Please just let me know when he joins so that he can attend to all the tax questions. Now, this is directed to Mr. Pedro. Ladies and gentlemen, can we please settle down? There's a lot of distraction going on in the hall. Thank you. Now, this is directed to Mr. Pedro. It says, as the local, a microphone for Mr. Pedro, please, so he doesn't have to keep getting up. Please bring one microphone to the front. Thank you. Now, sir. As the local players, Aradel, Seplat, and others, working on expanding their hold, they would need loans. Do you think indigenous Nigerian banks are capable of facilitating these loans now or in the nearest future? Please give the mic to Mr. Petra.
Okay, thank you very much for that question. I think there's a space for the Nigerian banks to play in, but I'm not sure that the Nigerian banks sufficiently understand the oil and gas sector, and number two, whether they sufficiently have the depth of capital required. So if you look at those acquisitions I showed you, that 6 billion naira acquisitions that I showed you, not too many banks, Nigerian banks participated in that acquisition process. Okay, the Nigerian banks have had their fingers burnt in the past, dealing in the oil and gas sector, particularly in the marketing space. That I think right now, I think they are kind of running away from the sector. So two things need to happen. Number one, they need to have a better understanding of the oil and gas sector because it's high risk, high reward. Number two, the capital needs to be deep enough for you to be able to lend a $1 billion, for example, or $500 million, and not, if anything goes wrong, it's not significantly impact your balance sheet. So there's a work for them to do. But they're also involved in the sector, so I don't want to tell you that they're not involved, but not at the level and scale we saw on the board, in terms of the billions of dollars or $500 million required. Thank you.
Question here that says Nigeria makes so much policies in putting the economic system into stability, but we are faced with opaque issues in the policy. Most policies affect SMEs directly or indirectly. Okay, is this a question or a statement? This looks like a statement. All right. The next question here is, this one is for Dr. Yemi Kale. I'm not sure he's still there, but it says, according to the CBN published outlook for 2026 and the national single window expected in Q1 2026 is an important key to enhancing the external sector stability and international competitiveness. Do you not believe in the possibility of its implementation, or how do you think it will help resolve Nigeria's chronic trade leakages? Or do you think it will just add a digital layer over the already bureaucratic bottlenecks? Is Dr. Yemi there? Okay, if he's not there, Dr. Ayo Teriba, this is, or Mr. Pedro, this is directed at you. How can the need for equity financing, as proposed by Dr. Ayo, be reconciled with the continued and expanded oil exploration advocated by Mr. Pedro, especially given that much of the viable international capital is now guided by ESG principles? Dr. Teriba, do you want to take that, or Mr. Pedro?
Okay, I wanted to see if Dr. Teriba is on the call. If not, I'll make a stab at it.
Take a stab, and after you, I will add whatever I want to add.
Okay, thank you very much. So clearly, globally, the need for green or global emission reduction, that's kind of affecting green financing is called. So a lot of people, particularly in Europe and America, are not interested in financing things if it has to do with oil and gas, because they have to go back to their investors back at home who are not interested in fossil fuel reduction. So you may not find financing from some of these, but I think people are, because the returns are good, there are still bankers who are interested in doing that. So if you're talking about equity financing, for example, I think the intention or my understanding of Dr. Teriba's comment was on government-owned assets. Okay? For government-owned assets, I think that's what we're talking about equity financing. So, for example, saying government should set up national assets like NIPC. Okay? If you listen to the NIPC MD, there's a plan to list NIPC, I think in about 3 to 5 years' time. So that will finally come to place. Listing NIPC like we see some other national oil companies across the world. But that is 3 to 5 years' time. That's when NIPC will be listed. But for the indigenous players who are buying up assets, they are getting their own financing, even though there are challenges with sustainability and all of that. They're still getting financing from banks in Europe, from banks in Asia, who are willing to finance and take a risk. Thank you.
All right, thank you very much, Mr. Pedro. Before we continue, there is an important matter we need to attend to very quickly in order not to offend our sponsors. So please, ladies and gentlemen, in the next 5 minutes, we're going to take a message from our sponsors, ICO Capital Limited. And to handle that, we have Ogonna Chukuma, who is the head wealth management, ICO Capital Limited, and she's speaking on behalf of Dr. Femi Ademola, the MD, ICO Capital Limited. Please put your hands together as she makes her way up stage. Please keep clapping for her, make her feel welcome, for a quick message from our sponsors. Careful.
remains pending, right?
Yes, please. Dr. Tariba will be back shortly, please. Just
Okay,
hold
all
on
right.
for us.
Good afternoon, distinguished ladies and gentlemen. Thank you for this opportunity, and my team and I were all honored to be present at this event. My name is Ogona Chukuma. I currently head the wealth management team at ICO Capital Limited. At ICO Capital, we are focused on helping individuals, institutions, and families to process, manage, and protect their wealth, then grow their wealth and ensure that this wealth is transferred sustainably to generations successfully. We do this by combining deep insights into the local markets, investment strategies, and obviously the best global practices. Our wealth management business provides tailored investment solutions for our clients, which includes various portfolio management services, alternative investment services, investment advisory, and structured products. Beyond returns, we are aimed at being trusted partners to our clients, where we help our clients navigate the markets, manage the risk involved, and also, most importantly, position their assets for sustainable growth. Some of these structured products that we have are, one, the guaranteed income product, that's the GIN. This is basically like our fixed deposit products, which you can enter as little as 1 million naira to 1 billion naira, and the rates vary from like 8% to about 19.5%. And also, these GIN products are tenured and be kept with us for at least 60 days, 90 days, 180 days, or at least 365 days. Another product that we offer is the mutual funds. So with the mutual funds, we have the ICO Money Market Fund. This is an open-ended fund that is basically better than the savings accounts and will give you interest better than your regular savings accounts in the bank. So this means if you have idle funds or you want to cultivate a savings culture, you can always invest in the ICO Money Market Fund, which is currently at 18% per annum. You can enter as little as 100,000 naira, and you can, there's no limit to the investments that you can do with the money market, and the returns is 18% per annum. And what I mean by an open-ended fund is that you can enter and exit at any time without penalty. For the AEF, which is the ICO Eurobond Fund, this is another mutual fund. The minimum holding period for this fund is 90 days. This is because the underlying assets for this fund are Eurobonds, and they are in USD dominated currencies. So if you have minimal USD or you have transient funds, probably $1,000 to about $10,000 or $100,000, you can invest this sum and earn interest on it, because even the USD, if you have USD outside of the country, you cannot earn interest on it, but you can earn as much as 4% currently per annum on your USD, and thereby growing your wealth. Another mutual fund that we have is the ICO Balance Fund. This is also known as the ABF. So this is for people that have a bit of risk or can take a bit of risk appetite. Like, for instance, the funds are invested in assets like equities and other assets that have a bit of risk. So if you have an appetite that you can take risks, you can decide to invest in the ICO Balance Funds. And we have seasoned portfolio managers that can ensure that your funds are safe, your principal is safe, and you earn returns on it. So it can go as high, from the track record for last year, it went as high as 37%. So if you think you have appetite for risk and you want to invest, and earn large returns, you can invest in the ICO Balance Fund, and then you can add funds subsequently, and you can also withdraw after 90 days. So for further questions, I and my team are present. We're here to attend to your questions, and we're available and hope that we have meaningful conversations and partnerships with everyone here. Thank you.
Together for Ogonna Chukuma, that's representative of ICO Capital Limited. It's only the president that is clapping. Why? All right, thank you very much, sir. So, Dr. Tariba, would you like me to read that question again? The
You
question
don't need
that
to.
was...
I understand. Yeah.
Okay.
Out, concerns about ESG concerns about the transition to net zero, and quite a few companies and countries are beginning to insist, on clean energy, renewable, and the rest of it. But the point is, there's a marketplace for equity. And as in all markets, one man's food is another man's poison. So as you have companies and countries that are, have strong attitudes towards financing fossil fuel, you have countries and companies who still believe in fossil fuel. Not least, for example, the current president of the United States, who still wants to drill, he says, drill, baby, drill, and is going to champion the commitment of investment into development of Venezuelan oil. Dangote refineries has served notice that they are coming to the market this year. So let's not give excuse. Go to the market. Not everybody is going to believe in any issue. Aramco went to the market in 2019. And they're still there, so let's not throw any excuse in the way of anybody. All state-owned companies should be good for the market, including LNG, and the NNPC should stop postponing. We need equity financing yesterday, and I do hope the government will take steps towards that. In a nutshell, that's my response.
Now, the next question is directed at Mr. Fashua. It says 2,000 tractors are yet to be distributed for over 9 months. So what type of economic outlook should we be looking at in agriculture for 2026 for such redundancy? Now, second question says, security is still an issue as bandits that fled Sambisa Forest now spread across states. What measures is government taking to identify and flush them out? That's if Mr. Fashua is still online. Oh, he's not. All right, thank you very much. This next question says, we understand about the new, okay, this is tax, and Mr. Edele cannot join us. All right, I think that most of the other questions here are tax. So this is what I'm going to say. There is a presentation slide that he left behind, and I believe that we can have access to that slide. Any other questions that we have concerning, the tax policies and the regimes and all of that? Right now, the questions that I cannot take because Mr. Edele is not here, I would hand them over to the management and the excos, so that if at any point there's another event, these concerns can be raised. But I want to believe strongly that most of the answers that we are looking for are inside that presentation slide. So please get yourself a copy of the presentation slide. On that note, can I have that? Thank you. Thank you. All right, ladies and gentlemen, please can I have one house, please? Can I have your attention for about 2 minutes? Thank you. Now we have come to a very important point in today's conference. And I believe that all that we have discussed today would give us some sort of idea of what to expect going into 2026, especially when it touches our economy as a country and as businesses. So on that note, ladies and gentlemen, I'd like to bring up here for the closing remarks the Director General of the LCCI. Can someone help me get the Director General? She stepped up for a second. All right, I'll be bringing her up here. Close. Oh, are you taking it, sir? Oh, ladies and gentlemen, please put your hands together for Sir Ladis Smith, Vice President, LCCI. Yes, sir.
Good evening, ladies and gentlemen. Please, can we give Oluwayemisi a round of applause? I think she's done a Herculean job. She has made the day easy for us, though it's been a long day. And I'd like to thank everyone for waiting this long to hear how the economy is projected to pan out in this current year. And it's our prayer that all the positives that we take away from here would grow our country better, make our businesses more efficient, and put a bit more money into our pockets. Without wasting much of our time, on behalf of the Director General of Lagos Chamber of Commerce and Industry, Dr. Chinyere Almona, my name is Salade Smith. I'm a Vice President of the same chamber, and it gives me pleasure to say a big thank you to all those who have graced this occasion today. I'd like, on behalf of the President, to thank Dr. Yemi Kale, the Group Chief Economist, African Export-Import Bank. Please, a round of applause for him, please. He may have gone, but if he's still online, we'd like to say a big thank you. We know how busy it is for you to have made time at short notice, but we know and trust that this is something you do, and you do very well at short notice. Secondly, we'd like to thank Dr. Ayo Teriba, the CEO Associates. A round of applause for him too. Dr. Ayo Teriba is a friend of the family, also is also a member of the chamber. We thank you for giving us your insights, and it is our hope that all the positives you said will be the proper narrative that goes into the public. Next, I'd like to thank Mr. Pedro Omo Toye. A round of applause for you. So I hope I pronounced that very well. Partner on clients and market leader for PwC. Thank you for always being there for us, because we know that you're also a very regular face in the chamber here. And last but not the least, I'd like to say a big thank you to Mr. Taiwo Oyedele, the Chairman, Presidential Committee on Fiscal Policy and Tax Reforms. A round of applause for him, even in his absence. You would see that it's a man who has gone through, he's not a very popular man. He's a man that people believe he's bringing pains. Meanwhile, he's bringing reforms. So it's also very unfortunate sometimes when we say negative news goes farther than the positive news. But I believe that we are in a growing nation, and I believe that better days are still going to come ahead of us. So let us all give ourselves a round of applause for seeing ourselves through the session.
Don't forget Dr. Tokwe Fashua.
Oh, Dr. Tokwe Fashua, sorry, my brother. Very, my great apologies for that. Dr. Tokwe Fashua, my big brother there, thank you for being there, for the good insights you always give to any issue that we always have in the chamber, and also being very available. You can also see that Dr. Fashua and Dr. Teriba must have been at sessions where they are doing similar work like we are also asking them to do here in the chamber. So please extend our regards to him. I'm not sure he's still online. So on behalf of the President of Council, Lagos Chamber of Commerce, I want to say a big thank you to everyone. And we hope that every other program that we have in the chamber, that we would also find good attendance for this. Thank you very much, and God bless you all. Bye-bye.
A round of applause for Salade Smith. All right, ladies and gentlemen, you've been an amazing audience. Thank you so much for coming. Thank you for participating. Enjoy the rest of your day and have fun as you go home. I would like to remind you, my name is Oluwayemisi Akingbola, and I'm going to collect the money for my cow. It's outside. All right, ladies and gentlemen, have a great day. Thank you so much.